Good morning, everybody. Welcome back to another episode of the Market Open, all the way from San Francisco. It is currently, right now, 5:45 in the morning, but I am excited to be here because we got a lot to talk about in the context of the equity markets. Tanner is not here because he needs his beautiful sleep, and so there was no way in hell he was going to wake up at 5:45 a.m., but if we do the market close today, which I think we should be doing, Tanner will join the stream, and Roy, and we'll get a stream with all three of us. Good morning. We're here. Robinhood's Gold event will be today. Very excited for it. I think it'll be a fun event. We'll see a bunch of brand new products. We'll get to hear from the company, and so excited to do that. That's going to be happening later in the day, 6:30 California time, 9:30 Eastern, and so yeah, that'll be happening later throughout the day. But for now, we got the market open. A lot of stuff to analyze. We got a bunch of headlines breaking this morning that are actually very interesting. And so we'll be going through all of them. Pre-markets are red, which is, I mean, yeah, I kind of expected pre-markets to be red. The S&P 500 is basically flat. It's still green, but it's flat. But NVIDIA's red. NVIDIA got a nasty headline this morning. Tesla's red. Tesla ended yesterday up 3% after being up 20% the day before, so, or 13%. So yeah, I mean, you could see some red here. Although Tesla last night got a really good headline. And quite frankly, the headline that Tesla got last night at around 9 p.m. might have been the reason for why we got that 15% surge a couple days ago, based on what the market was already pricing in, because somebody already knows. Palantir's a little bit red. CrowdStrike's a little bit green. Meta's a little bit green. I mean, you got a relatively flat market that's kind of red, kind of green right now. Most of the growth stocks are red. So we'll talk about it, and we'll go deeper into all the different dynamics we have of why things are green or red. Thank you, everybody, for being here. Jem, Nolan, Colorblind Collector, what's up? Jordan, Ed, hello from Florida. Hello to you, Ed, from San Francisco. By the way, this is the first time I've been in San Francisco. First time ever. I've been to Palo Alto many times. I've been to Berkeley many times. I've been to LA many times. I've never actually been in San Francisco. Like, I've never seen the Golden Gate Bridge, like done a tour of it or anything like that. It's interesting, to say the least. All those headlines you see about people shooting up heroin on the streets, yeah, those are real. Like, it's definitely real. It's a beautiful place, but you'll definitely see some of that as well. It kind of reminds me a little bit of New York, just with like a Times Square type of vibe, although it's not really like that. But yeah, look, it's a cool place. I'm going to explore a little bit more after the show and walk around a bit. But excited to be here because I've literally never been here before. Benny, what's up? Good morning. Missy, Corey, Jimmy Edwards, what's up? Diane, Justin Bryant. Colin says you should give Tanner an early morning wake-up call. That would actually be hilarious. Tanner's a funny guy. Tanner's just in person. Like, Tanner in person is exactly how you would imagine him to be, and he's hilarious. He really is hilarious, dude. Just like him, like, talking is funny. Like, the way he interacts is just so hilarious. So hopefully we'll get to make some content today, and you guys will get to see him. Also, we didn't get to try out a Waymo last night, but I saw like so many of them running around the streets, and I'm so excited to try one. It like, that feels like the future of transportation, and I want to try that today. So I'll give you guys an update on what that feels like when we try the Waymo today. Scott, what's up? Uzi, what's up? Are you doing a meetup or no? So I'm here for the Robinhood event. No meetup today. We'll be doing more meetups starting in April, but no meetup in the Bay Area today. But we did the Bay Area meetup 2 weeks ago, right? So unfortunately, we just don't have time this time, but we will definitely resume the meetup starting in April. Greg, what's up? Thank you for being here. Troy, amid all night sewing curtain into a shirt. These are good curtains, right? This is a good hotel. This is a decent hotel. So we got the nice curtains in the background. They actually upgraded my room, and they upgraded me from a single to a deluxe. I was like, oh, that's nice. So thank you guys for that. Appreciate it. But yeah, we are here. Good morning to everybody. Thank you all for being here. Carolyn, Brent, Crowd Control, what's up? Ruben, P. Nick, Scott, Andy, Rodrigo. All right, let's get into it. Someone says I look tired. I am tired, but I have a lot of energy. Like, I slept last night at 12, which was technically 3 o'clock for me because I'm coming from the East Coast. But whenever I do these trips, I was up by like 4:30 and I'm good to go. So I don't know, something about the adrenaline or whatever gets me awake in these West Coast trips. And then we're good to go. And then it's like, dude, you're done with the show and it's like 8 o'clock, and it's crazy because of this 3 hour. It's insane that in 3 hours, like, the day is just starting, but the market open is done. I don't think I could ever live here, but if I did live here, you would just feel so productive by the time it's like 8 a.m., which is wild. So, all right, cool. Let's get into it. We're going to start off with Grab. We're going to start off with Grabby Grab because I woke up this morning, did not expect to get this headline, but we got this headline, and I told you guys my thoughts a couple weeks ago. I don't care about making money on Grab anymore. I just want to be fucking right. I just want to be right. You get to the point when you have been in this business long enough, which for me, I guess is 4 years, which is not really long in the grand scheme of people that have been picking stocks for a while, but you want to just get it right. And you're going to get a ton of things wrong. I've gotten a ton of things wrong, but I want to be right on this thesis. And slowly by slowly, I think this thesis is going to play out. Here was the headline this morning. Dude, I think we're going to be right about this. There's a shot. Grab is in talks to raise a loan of up to $2 billion for a potential takeover of GoTo. So this news came out in the morning. We know that Grab has been thinking of this acquisition for a long time. This acquisition would fundamentally change the trajectory of the business. Maybe the market doesn't care about this acquisition when it happens, and maybe even when the acquisition goes down, like the stock really doesn't reflect it. But maybe it does. And the reason it would is because if Grab ends up buying their biggest competitor, their margins in particular, forget adding the additional $1 billion in revenue, forget adding the additional hundreds of millions of dollars of EBITDA, they get rid of their biggest competitor in Indonesia. That's another 30 million active users, and they can increase their margins because they don't have to compete penny for penny with another company for margin. So this is the report from Bloomberg. Singaporean ride and delivery firm Grab Holdings is in talks to raise a loan of as much as up to $2 billion to back its potential takeover Indonesia firm-based rival GoTo Group, according to people familiar with the matter. Look, I think it's a good idea. I think it's a really, really, really good idea. At the end of the day, they have a lot of cash, and that cash needs to be used in a way that establishes their moat. Grab, I think, is going to become a $100 billion company one day. Right now, it's at $20 billion. It will become it already is a behemoth in Southeast Asia. It will become a bigger behemoth in Southeast Asia, but it's competitive. All these margins in the context of food deliveries and ride hailing, every company is trying to race to the bottom to be able to get your business, which means the consumer wins, but the company doesn't. And so the reason I've been so excited about Grab, and the reason hopefully I will be right about this, is because this is a stock that is trading at a 3-year consolidated base. When you look at the chart, this is a stock that has $6 billion in cash with an $18 billion market cap. And this is a stock that has just become free cash flow positive, EBITDA positive, and net income positive. Usually the street tends to pay a little bit of a multiple when you are just in the infancy of becoming profitable as a growth company. And I think over the next 10 years, this company can have double-digit growth. Now, what does this mean in the context of the acquisition? So here's some analysis by my friend Gab Growth, great Twitter account. If you don't follow them and you care about Grab, I'll link them right here in the chat. Phenomenal analysis on the company. So he says Grab reportedly is taking a $2 billion loan to fund the acquisition. Currently, Grab has about $6 billion in cash on their balance sheet, with about $300 million set to go into buybacks. That leaves about $5.5 billion in cash for the acquisition. With Grab now free cash flow positive, bringing in $800 million in free cash flow in 2024. Again, almost $1 billion in free cash flow. Like, that is something I don't think the street is going to ignore once they start seeing net income profitability go up as well. I would argue they do not require any more than $2 billion in cash on their balance sheet. So because they have $800 million in free cash flow, they don't need the $6 billion in cash that they have, which is why everyone's been wondering, what the hell are they going to do with all this cash? Like, you can't ignore a company that's almost 40% in cash, because either that company is the most incompetent company ever, aka GameStop, that has like $4 billion in cash that doesn't know what to do with it. We'll talk about them, not trying to take a cheap shot at them, but we'll talk about their earnings in a second. Or the company has something up their sleeve, and I think Grab has something up their sleeve. So GoTo currently trades at $5.7 billion on the Indonesian public markets. Say Grab offers a takeover premium of 20%, that would equate to a $6.8 billion offer, roughly about $7 billion. And that has been rumored in the articles over the past couple of weeks. 80% of that deal can then be financed with cash plus a loan, leaving 20% of the deal to be financed through stock. I think this makes sense and is a no-brainer move for Grab. All we need is regulatory approval. By the way, I think if Grab's literally in talks to get a $2 billion loan, they have the regulatory approval already, in my opinion, if they're getting ready to raise this money. And then he says management raising $2 billion in loans rather than doing a half stock, half deal seems telling. And the reason for that is because they think their stock is cheap. They think their stock, if they wanted to dilute shareholders by raising $3 billion in cash or by issuing a ton of stock, that means they don't think there's a lot of value in their stock right now, and they'd rather just tap the public equity markets to raise cash versus the private debt markets. The fact that they're going to private debt markets to me is very interesting because essentially they're saying, hey, we're cheap right now. We don't want to dilute our shareholders. We've already, been a crappy return for our shareholders for the past 5 years. If you've been holding Grab for the past 5 years, it's been horrible. It's been disgusting, right? And I'm trying to swoop in and catch the bottom of January 2025, saying, okay, $4.50, that's the bottom. If you had to deal with 15 in 2021, I'm sorry. I had to deal with 27 of Palantir in 2021 and wrote it down to 6. But I'm trying to come in and say, okay, now the business has gotten to a point where it is ready to take off. The base has been consolidated. They need a big move, either in terms of growth or in terms of M&A. And this whole ship can turn around and we're never going to see $4 or $5 again because we're going to be way past that. That's what my thesis is evolving to when it comes to Grab. And the fact that they're not diluting money to be able to get this to be done, to me, I think that means they think they're cheap and they don't want to dilute shareholders and hurt them even more than they've done over the past 4 years. And again, they're a product of the SPAC era. I don't really just blame Grab. They just shouldn't have gone public, right? They were in a company that deserved to go public at that time. A lot of companies had that issue. Grab is one of the only companies surviving, them and SoFi, from that era that are actually growing, that are actually profitable, and that have a trajectory into the future that can make sense and that don't have a crap ton of debt on their balance sheets. So, I mean, look, it is going to be really interesting to see if they can actually pull this off. But I think if anyone was going to make an acquisition like this, it would be Grab because they have the political connections as well in good old Southeast Asia, which a lot of it is run through families, and your family has to know the state's family, et cetera, to be able to get this done. Anthony Tan, the founder of Grab, he's also a founder CEO. That's another thing I like a founder CEO saw the opportunity in 2021 to raise $5 billion through a SPAC going public. He took that opportunity. It's been a crappy, 4 or 5 years. That happened with Vlad as well, right? They went public at 38 a share. Robin probably shouldn't have been worth 38 a share in 2021. Had a crappy 3-4 years, and then they turned the business around because a founder CEO is one of the best people that can actually make that turnaround happen and reward shareholders. And that's what I think Anthony Tan is doing as well. He's very well connected in the Southeast Asian region. Grab right here, up 2.64%. I mean, they should be down with the rest of the market, given the rest of the market is red. I did buy 1,000 shares of Grab yesterday at 456. So I did buy. I was actually on the airplane because it was at 468 the whole day. It went down to 456. I was like, this is stupid. Grab is just being done with the algo. So I bought 1,000 shares yesterday. But I think it's green right now off the potential of this rumor. If it was actually real, it would be up a lot more. But the potential of it is why it's green right now. This also could explain the dark pool stuff that we've been seeing over the past couple of weeks. I mean, we've been seeing 20 million shares traded on the dark pool, which is not an insignificant amount for Grab. We don't know if those shares were bought or sold. In my opinion, those shares were bought, but they might have been bought because institutions kind of knew that, hey, these guys are getting ready to take out some money in a loan to be able to finance a deal. They probably already have regulatory approval on the way. And so as a result, that's why some of these shares might have been acquired on the dark pool. So there you go. That's my update on Grab. Looks like the market is excited to see them make this acquisition happen. We don't fully know if this acquisition will be successful, right? Even if it does happen, the business still has to execute when they have the acquisition. However, I think more often than not, there is going to be a very, very strong chance for this acquisition to go well, simply because there's not that much of a synergy of different businesses. Usually most M&A fails because XYZ enterprise company acquires another enterprise company, and there's no symbiotic, simultaneous relationship that allows the companies to work together. This is just a ride-hailing app and a deliveries app working with another ride-hailing app and a deliveries app. So I think, to me, this makes a lot of sense to happen, and it works very well. By the way, here's an article that I saw on Seeking Alpha yesterday on Grab. Last thing I'll say on Grab, this article, if anyone wants to read it, great article right here. This is a woman who actually went to Grab, had the experience. And here's what she said about Grab versus GoTo when she actually tried both. And GoTo is the company that they are trying to buy. So during a recent 2-week trip to Indonesia, I used Grab and its competitors every single day in order to build a clear picture of the competitive advantage or disadvantage of the company that I'm investing in. What impressed me the most was the fact that I was waiting for my drive not more than 3 to 6 minutes. It didn't matter if I was in central Bali or some remote, faraway location. The app worked perfectly. Drivers wore company uniforms, vehicles were clean and new, and the whole experience felt a lot better than any Western services I've used. I've traveled a lot. I've used a lot of apps, and honestly, I didn't expect Grab to be this good. It's Uber level easy and comfortable. Now, in the context of GoTo, there was a little bit of a different different feeling. So she says, when I was in Indonesia, I used both Grab and Gojek. GoTo is the parent company of Gojek, the company that they want to acquire, all the time, at least 3 to 5 times daily. Gojek was around 5 to 10% cheaper. That's what's screwing Grab on their margins. But the level of the service wasn't even comparable. With Grab, I could order a ride with a very remote location and still get a pickup within a couple minutes, while Gojek took 6 to 10 minutes to arrive, even in the center. The cars and motorbikes were newer, and the drivers often wore official uniforms. Gojek, on the other hand, felt more like a group of freelancers. I think the acquisition makes sense. I think it makes a lot of sense. It's time to get it done. And if they can get it done, I think overall this will be a good deal for Grab. So let's see how it plays out. It's going to take some time, but if it does end up happening, will be very exciting to see how this plays out. Okay, cool. So that's what we had in the context of Grab. Let's talk about NVIDIA. So we had an NVIDIA headline this morning that wasn't pretty, and I think that's why NVIDIA is down about 2% right here. I don't know how much to read into this headline because it has to do with China again, and the China headlines usually are a buy the dip. But this is what this came out here. So NVIDIA's $17.1 billion China business, about 13% of its total revenue, is now at risk. Beijing's top economic planner, the NDRC, has introduced energy efficiency rules for new data centers that disqualify NVIDIA's H20 chip, currently its flagship AI product in China. While the rules aren't fully enforced yet, regulators have already encouraged tech giants like Alibaba, Tencent, and ByteDance from ordering H20s from NVIDIA. See, the reason this is so interesting is because when did Beijing start really caring about the environment? Is this really Beijing cares this much about the environment that they're gonna try to lose their lead or try to lose their potential innovation in the context of AI by banning NVIDIA chips? If applied strictly, NVIDIA could lose major market share to its domestic players like Huawei. That's the actual reason I think they're doing this. It's not because of the environment. It's because they need a scapegoat to be able to get Alibaba, Tencent, all the big Chinese tech companies to buy from Chinese chip companies versus American chip companies. The H20 was developed to comply with U.S. export controls, but now faces regulatory pressure from both Washington and Beijing. The company is reportedly seeking talks with China's NDRC and considering technical changes to meet the rules, though those tweaks could weaken the chip's performance. So that's what you got in the context of NVIDIA. I mean, I don't know. Does this sound like BS to you guys, or it's real? Kind of feels like Beijing just wants Jensen to kiss the ring and like potentially open up new opportunities to be able to get them to potentially buy other chips, or maybe negotiate by saying, hey, we'll get rid of these regulations in the context of in the environment if you can sell us Blackwell. And they can't because the United States won't let them. Trump definitely won't let that play out. So I don't know. It is kind of weird. I could imagine how NVIDIA is down on that news, though, down 2% right here after hitting 120 yesterday. Primarily based on this idea that, well, if you're going to lose a majority of that $13 billion in revenue, that's something that the street has to put into their estimates. And I don't think that means NVIDIA has to fall like 10, 20%, but that NVIDIA doesn't have to go up 10, 20% if 20 billion of the revenue is at risk here. So I don't know. It's just not that interesting, dude. It's like really Chinese regulations. That's the way, or environmental regulations is the way they're playing out. Trade war after effects definitely can be a function of the trade war. April 2nd, again, is looming over our shoulders. We got to see what ends up happening there. The one country I think that will get the brunt of it is not Canada or Mexico, but it is China. Trump's had a trade war with China before. I don't think he's afraid to do a trade war again. So at least with China, with other companies or countries, I don't think it's like as relevant. Wow, this hotel actually has USB-C cords. Holy crap, dude. This is like, shout out to the hotel, bro. I've never seen a hotel actually have a charger. They actually have a charger. That's pretty dope. All right, cool. So hopefully my phone is still at like 2% or whatever. Where are we at? We're at 11%, bro. Your boy's doing better than usual, 11%. But anyway, I don't know. It feels weird. But that's why NVIDIA's down right now. That's why NVIDIA is down right now. This sounds very serious. Yes, it definitely sounds very serious when I saw the headline this morning. So I can understand why NVIDIA is down 2%, but every time there's a Chinese headline, it tends to be a buy the dip. Then he says, Apple just did $1 billion on NVIDIA GPUs. Feels like that news should counteract this news, to be honest. Well, if NVIDIA does $13 billion in revenue in China and that goes down to like, what, $6 billion, the $1 billion Apple stuff is not going to counteract this. But I would be hard pressed to imagine that all those companies moved to Huawei to buy their chips over NVIDIA. I mean, a lot of the DeepSeek innovation happened on top of NVIDIA chips, which led to this whole, this whole feeling that, hey, maybe you don't need that many NVIDIA chips, but it comes down to, well, if it's going to get cheaper to train inference, then the cost of compute should go down, which means we should get more compute, not less compute. But all of that happened because of DeepSeek's innovations with the reasoning model on top of NVIDIA chips, not on top of Huawei chips. So I don't even know if the companies want to use Huawei, but if the CCP is forcing them to, it's either going to be something that they have to do or something that they fight against. But I guess we will see how that plays out over the coming weeks when it comes to NVIDIA. Do you carry your mic with you when you are traveling? Yes, I've just put it in my bag. My bag was pretty light. I mean, I'm only here till tomorrow, like morning. So it's a pretty quick trip. Last night, here for the full day, and then down tomorrow, and we're good to go. Amit, should I wait until after the gold event to transfer an account to them, thinking I might miss a perk if I go now? I don't think you're going to get better than a 2% transfer. So whether you do it today or tomorrow, I mean, you have 5 days left to do it till March 31st, but I don't think you're going to, I doubt there's going to be any perk better than 2% transfer. They also, all the gold drops, the crypto 1% transfer, the gold physical bars they're giving, all of that news is out. So I don't think they have any new perks that they would use to incentivize. But yeah, 2% is a hell of a deal. I talked to a couple of people yesterday that are really thinking of bringing over a lot of money, and their only concern is customer service of like, hey, can Robinhood deal with the fact that I have this much money and I might need like personalized service? And that's where their platinum desk offering, which maybe we'll hear more about today, is becoming like something where they actually like get on the phone with you like a Morgan Stanley would. And so I think to service the larger accounts they're getting, that might be when they start issuing like personal customer reps to deal with that. But yeah, I think 2% is the most they're going to give. The lockup time is 5 years. Lockup time is 5 years. Hood concierge, exactly. Do you own any SoFi? Yes, I have SoFi options. And I was talking to Tanner last night about SoFi, obviously, because Tanner loves SoFi. And I was like, so where do you think this thing is going? And he was like, I can't see them not hitting 20 by the end of this year. Which I hope happens, because if they do, my options will print. But I didn't think they deserve to go down to $10. I also don't think they deserve to be at $13 right now. I think they deserve to be closer to 15, 16. But the market's the market. They got to see some loan platform growth and some tech platform growth. And hopefully by the end of the year, we get back to that $20 range. So here's an update from Barclays. They cut their base case year-end S&P 500 target to new Wall Street lows of 5,900, saying tariff uncertainty will impact U.S. earnings growth. Their bull case is 6,700 on the S&P 500. Their bear case is 4,400. I mean, if we get 4,400 on the S&P 500, things are going to get very ugly. I don't think that would be the case. Hopefully not. But seeing 5,900 by the end of the year wouldn't surprise me. That basically means we chop for the next couple months, and it is what it is. But more likely than not, hopefully we are closer to that 6,700 to legitimately have a third year of a bull market. 5,900 probably wouldn't count as like a meaningful bull year in this 3-year run. Elon Stan said, Platinum Desk is real. I get a dedicated agent who responds immediately on chat and call. Yeah, I've talked to a couple other people that have very large accounts and they get that Platinum service. So I think they're ready to help people that have very big accounts. It's just a question of those people knowing and trusting that they're going to get that customer service. Because if they don't trust it, then it becomes very hard to transfer over a lot of money. Like I was talking to a guy yesterday who wants to bring over a lot of money, like a lot of money. And because the 2% is very, enticing when you have a lot of money, but his biggest concern right now is just customer service. Okay, here is an update from Tesla. Let's talk more about Tesla. They tweeted this yesterday, and a lot of the Tesla employees quote tweeted this and helped spread the word. They said the future is autonomous and it starts in Austin this June. Thanks to Austin City and Texas DOT for hosting and supporting our efforts to unlock safe and low-cost premium point-to-point electric transport. It looks like it is official, folks, and Robotaxi is coming officially in June. I think it's going to be very exciting to see how this ends up playing out, because you've already got Waymo that's in Austin. You've got Waymo, obviously, in San Francisco. Tesla needs to get a case study of Austin done effectively. They need to prove that they can beat Waymo on the pricing and the user experience. And then they're probably going to be expanding to other areas as well. But this could have been the reason, quite frankly, why Tesla pumped a couple of days ago. I mean, like, maybe the street or retail, whoever it is, knew that they were going to pseudo officially announce that we are launching in June. I mean, I know Elon has said it for the past couple months, but like until they actually make the announcement, everyone's always on edge of like, are they actually going to launch Robotaxi? And it's happening. It seems like it's officially happening. So this is going to be very interesting because now it's going to be a question of like, hey, what does the pricing look like? Can Waymo get you a better cost than an Uber? Can a Robotaxi from Tesla Cybercab get you a better cost from Waymo and Uber? Can the Robotaxi scale better than a geofenced Waymo? Can the neural nets do better than LiDAR? I mean, all of this stuff is going to be up for debate starting in June. And I think that's going to determine the trajectory of the stock. That's also going to determine if people like the user experience better. And if they do, FSD will officially be in action when it comes to Robotaxi. Zokol says, crazy that Google didn't get a pump given they are proven in this area of transportation. Yeah, I mean, this is why to me Google is ridiculously cheap. Like they're not getting a pump on anything. There are so many Waymos. Sundar announced a couple of weeks ago that Google's doing 200,000 paid rides a week on Waymo. That number's only getting bigger. Because they're expanding. I mean, they had just announced Washington, D.C. for 2026. Like they're expanding way faster than Tesla. Now, granted, there's obviously a disadvantage to some of their geofencing versus what Tesla's doing with just pure neural nets. Tesla's trying to take the hard way, but do it like perfectly when they launch, whereas Google taking a little bit of an easier route with LiDAR, but still getting it out into the world, which is, I think, you could argue more important. But the street's not giving them any multiple on that. And imagine that becomes 1 million rides a week in the next year. I mean, like if they can really scale, it was only 50,000 rides a week back in August. So it is 4x in the past 5 months. And if that continues to grow at that scale, that will be something that is really beneficial to Waymo. So that's what we had in the context of Tesla. Now, we also had another piece of news. A lot of you guys pointed out the 1.4 billion accounting fraud headline from a couple of weeks ago or a couple of days ago. The Financial Times issued an apology after suggesting that Tesla had shady accounting with 1.4 billion missing. FT said one unavoidable conclusion is that at a certain point, it's necessary to trust the auditor's judgment. So whatever that headline was a week ago that people were freaking out about, yeah, that just wasn't true. So Elon said, turns out the Financial Times can't do finance, which was funny. But yeah, that headline was a bogus headline. Didn't end up playing out. So that's what we have in the context of Tesla. Now the stock right here at 284. I mean, I was talking to Tanner and Roy last night about like, hey, are you buying Tesla at 284? And both of them were like, dude, we can't do it. Like, we just can't. Like the multiple is just like, this is just, it's aggressive, bro. It is really aggressive what you're paying right now in the context of Tesla. And we'll talk about it more on the market close, but we were trying to figure out why is Tesla getting this run? Like, why is it happening? And quite frankly, it's a stupid question because it's Tesla, right? Tesla will go up and down, and it is what it is. But you could say maybe it's because of Robotaxi, maybe it's because of Optimus. Oh, by the way, we do have an Optimus update. I don't know how big of a deal this is going to be, but we're going to see if this is more than just like a photo shoot. Tesla has invited lawmakers in Washington, D.C. to come see its Optimus robot at a robotics symposium on Capitol Hill tomorrow, aka today. So we will like see if the Optimus robot starts to get more headlines in the Washington area as more politicians get to see it. But again, it's got to be doing something. Like if it's just standing and maybe walking around a little bit, that's not really an update for the stock. Like that'll be a cool thing for Tesla, but that doesn't tell investors, all right, Optimus is prime time and you guys are definitely going to make 5,000 of these things and ship them out this year, which is what Elon's timeline is. So yeah, I don't know if it's Optimus. I don't know if it's Robotaxi. It's definitely not the auto revenues, but this surge that we've seen in Tesla, I mean, quite frankly, if I had to sum up why it happened, because there's not really a fundamental reason, it's because it got oversold. Now, you could say at 215, it was still incredibly overvalued given the earnings they're about to put up, sure. But any stock that takes a more than 50% haircut, especially a stock that's as well known as Tesla, you tend to get buyers step in eventually. I mean, but we've seen that with plenty of stocks in the market historically. It's like, even if they are still aggressively valued, a 50% drawdown is a 50% drawdown. And I think the velocity of the rebound from that 50% drawdown in the speed at which it happened, basically 3 days, is what's so surprising. But the fact that it did rebound, probably not as surprising given it's Tesla. And Tesla tends to be Tesla when this plays out. New registrations of electric cars in Europe have increased by 30% this year, while Tesla sales have dropped by almost 50%. Correct. Tesla sales suck in Europe, and it's not getting any better. And the brand damage issue in Europe probably is a little bit more deeper than the United States, because in the United States, the Model Ys are selling out everywhere. Like all this inventory Model Ys, they're selling. And dude, after the market opened, the lady that I bought the Tesla from, the lady at the Tesla dealership, she called me literally like right when the market open ended. I wish she called me on the market open so you guys could hear how she sounded, because she was like, "Hi, how are you? Yeah, blah, blah, blah. So when can you take delivery?" And I was like, she was like, "Can you take it by Friday?" I was like, sure. She was like, "All right, cool. You have to take it by Friday." And I was like, "What if we can't take it by Friday?" She's like, no, you have to take it by Friday. And I was like, "All right, but like we might come in late on Friday." She was like, "We will be open as long as you need to pick up the car on Friday." And I was like, they are really trying to get these numbers, bro. They are really trying to get these numbers. Like, I was like, yeah, I don't think I can make it till like 6:30. They close at like 4:30. She's like, no, we'll be open. Don't worry. I was like, damn. I think that they get a fat commission for hitting their numbers, because Tesla wants to incentivize them to hit their numbers, because Tesla has public shareholders that they need to hit the numbers on. And so, yeah, this last push on inventory in the final couple of weeks of March, I think will be decent for their numbers, given the first 2 months probably sucked in Europe. However, their margins are going to take a hit. Their margins are going to take a bad hit, because taking $8,000 off a car is like, you're not making any money off of it. But hopefully people will buy FSD and that'll play out, and they'll make some money on it long term. But that's the thing. I'm afraid about their margins in Q1, and I'm still afraid about their deliveries, because whatever they're doing in March, I don't know if that's going to make up for the January, February declines that we've seen. But I don't think it has to be as aggressive as some people are thinking, which is why, maybe the stock stays flat or goes down slightly on earnings, and it doesn't have that 20-30% decline. Arnie says it's because of Garcia. It is definitely because of Garcia. Garcia got everyone to wear these, or to buy these $100 puts. And so it is definitely because of Garcia. UK, you get 2 years free supercharging when buying both Model 3 and Model Y, either new or inventory. Yeah, dude, they are ramping up the incentives. They're like Grab, bro. Grab spent like $500-something million on incentives last quarter, which is why they need to buy GoTo, because we need that incentive spend to come down. And when it comes down and their margins go up, it is going to be one of the easiest stories in the stock market, in my opinion. But they need to get this acquisition to go through. For those that are just joining, there are new rumors this morning that Grab is taking out a $2 billion loan, according to Bloomberg, to theoretically finance their acquisition of GoTo, which implies that the acquisition is a done deal and that the acquisition is getting ready to happen if they're actually taking out a $2 billion loan, because no company with $6 billion in cash takes out a $2 billion loan. What? Why would you take out a $2 billion? They have enough cash. It's because they need the cash to do something. And so we will eventually see if that ends up playing out for Grab. But yeah, in the context of Tesla, they're giving a lot of incentives, and those incentives are going to mess up the margins. And eventually we'll see how the street reacts to those margins. All right, let's talk about GameStop for a little bit, which we don't talk about often, but GameStop is up 11% in the pre-markets. Why is GameStop up 11%? Well, it looks like they're about to buy some Bitcoin. It looks like they're about to buy some Bitcoin. Now, why are they about to buy some Bitcoin? Well, last night after their earnings, which, by the way, their revenue is down 30% year over year, which is, it's just hilarious, dude. And management doesn't take any calls on the earnings, so you can't ask them about why. Revenue came in at $1.2 billion, down 28% year over year. However, they revised an investment policy authorizing the inclusion of Bitcoin as a treasury reserve asset. I feel like they should have done this many years ago. Many years ago. Not years ago, months ago. In May, I wrote a long post on X, not saying, I have any influence, but it was a pretty detailed post on why buying Bitcoin, I think Bitcoin was at 50,000 at the time, or 60,000, would be the smartest thing to do. And the only reason I said that is because they just got done diluting shareholders by about $2.5 billion. And so they ramped up their cash on hand to about $4.5 billion. And I was like, the easiest thing you do right now in a crypto bull market is just take a little bit of Bitcoin and put it on the balance sheet. It seems like Saylor met with Ryan Cohen a couple weeks ago, and he probably convinced them to at least consider it. And now they're doing it. So I think GameStop is an absolute mess. I think this is the dumbest thing ever. This is a company that Ryan Cohen took control over in a meme stock bubble in 2021. They have done absolutely nothing with the business. No turnaround, no plans to turn around, no explanation of what they're going to do. They tried some weird NFT game thing for like a couple months. That didn't work. And it's not even that their progress isn't working or that their ideas aren't working. It's the lack of transparency. They don't take questions from shareholders, but they dilute shareholder. It's the most absurd thing ever. But they're trading almost 50% cash. And so there is some fundamental argument to make that a company that has almost $5 billion in cash can do something with that money. But they've just given you zero reasons to expect they're going to do anything good. And now they're buying Bitcoin at these levels when they could have done this a long time ago. To me, it's just a horrible management of capital, a misallocation of investor interests. And I wouldn't touch this thing. But I can understand why it's up 11%. And I can understand why people would get into it. Just based off the pure hype and momentum. Roaring Kitty is probably out of the name. I mean, he hasn't tweeted about it in what feels like a year at this point. So I don't know what the fundamental case is on Bitcoin, or sorry, on GameStop. But if it's just Bitcoin, then it becomes another MicroStrategy. So I'd rather buy MicroStrategy. I'd rather buy the thing that actually is leveraged against Bitcoin versus GameStop. Yes, they are closing unprofitable stores, and so they're getting rid of some parts of the business that are pretty crappy, that have a lot of fat in them. But as a general principle, I just don't understand how GameStop has tried to treat investors, because it's just been pretty ugly. Let me check the short float real quick on GameStop, because that could also be another reason it pumps. If the short float is elevated and we get a squeeze. Short float is 7%. So, in 2021, it was 150%. So a lot of people that have the short squeeze thesis, I don't know if you get a short squeeze with 7%. But I just don't know what Ryan Cohen has done, dude. I don't know what I don't even know why he got into this. He had a successful exit with Chewy, right? That's the company he made. He sold that for a couple $1 billion. He didn't need to do this. And then he gets into this, and it's just like nothing has happened in the past 4 years. So I don't know. We'll see how this ends up playing out. If they go down the MicroStrategy route, then it is what it is. They become a pseudo MicroStrategy. But outside of that, not sure if there's anything that much more exciting in GameStop. Cool. Okay. So those are kind of the main headlines. We talked about Grab, we talked about GameStop, we talked about Tesla. No headlines on Palantir. Palantir just holding the $95 range. We did get a small partnership yesterday with Palantir and Everfox, which is an IT system solutions provider that is going to be utilizing Palantir as a mission manager product to enhance the deployment and management of third-party software within secure environments. So another deal in the context of deploying technology in confidential environments, basically like the DoD, the government, right? Critical data, you need to be able to protect that stuff. So that was one partnership we got. We have Q1 earnings probably coming up in about a month for Palantir. I think it's going to be a blowout quarter. I think we got a lot of different partnerships, and they're going to highlight increased revenue growth of closing in on 35%. I know they guided for 31%. I think we get closer to 35. And so that's kind of the main update in the context of Palantir. Let's hear from Gene Munster, get his thoughts on what he's thinking about of AI and where he thinks this is playing out over the coming years.
Being 3 times what they've had over the past or the next 3 years, equivalent to what they've done over the past 10. So consider that a month ago, they had some pretty bullish comments about the AI hardware infrastructure. And of course, what we heard from the hyperscalers at the end of January was that they accelerated from a 20% expectation growth to just above 40. Now, in the world of AI, a month is a lifetime. And so you can build the case that despite what Alibaba said a month ago, maybe things have changed. And so what do we know? Micron's the only company that's reported, despite their stock being down on margin guidance, they raised guidance by just under 4% for for the calendar year here. And so that's kind of the fundamental piece. But I actually think there's a bigger force in play here that gives me confidence about where the AI trade is. And this is not a race about the hardware build out. It's not about building an AI hardware infrastructure to power today's chatbots and tomorrow's agentic bots. This is a race, and this is what the hyperscalers are thinking. This is a race to get to artificial general intelligence. And we're probably 3 years away from that. That's the game that they're playing. They don't care about what the demand is for these applications 1-2 years down the road. They want to get to general intelligence, because at that point, you have exponential value that gets unlocked. And there is winner take most as they race towards that goal. And so as long as that target is on the horizon, I think you're going to see some magnificent spending from the Mag 7 on the AI hardware piece.
You know, Gene, when you talk about 3 years to AGI, I mean, it seems like an eternity again in this kind of generative AI trade. And I just wonder between now and then, and I'm probably one of these people, even though I'm the silver lining guy on the desk, I'd probably take the over in 3 years to AGI. So I guess my question to you is like these, what?
AGI, can we explain that?
It's basically general intelligence. It could be smarter than Guy Adami in 3 years.
I thought tonight was the show. Really?
We should. But Gene, help us think about like what might happen on that way to AGI if we do have a recession, if we don't find the use cases anytime soon. I mean, these companies have to be somewhat responsive to shareholder demands. And at some point, and we learned this from their earnings just a few weeks ago, when you saw revenue deceleration and you saw these companies stick to those, CapEx numbers, shareholders didn't like it. And they all went down 20% in a straight line.
By the way, real quick, Apple can now sell the iPhone 16 in Indonesia. I didn't even know the country banned the iPhone 16 in Indonesia, but they lifted their ban. Did anyone know it was banned in Indonesia? But yeah, it's not banned anymore because Apple said they would spend $300 million in the country via investment. So now they can sell the iPhone 16. So that's the update on Apple.
So I think there's going to be a difference between what happens to the AI stocks in that scenario if we get a recession versus what happens with the fundamentals and the hardware trade. So on the stocks, they'll go lower on a recession. Historically, that has been the catalyst, started the bursting of bubbles. If we even go back to the Tronics bubble in the 60s and 70s, that was the catalyst to that. And so, but your question is about what happens with the hardware piece, and will the hyperscalers basically pull back as they start to see, let's say we do go into a recession. And I think that it's reasonable to think there'll be some cuts to that, but I think that's probably some of the last places to get cut. I do believe what we've seen over the spending from the hyperscalers over the last couple of years is a sign that they believe if they don't make these investments, they could be irrelevant in the future. And so I think that intensity isn't going to change. I think, again, if there's a big pullback, they'll make some adjustments. But I think that the CapEx spending on the AI hardware piece is going to be relatively protected because of that big existential risk that they're facing.
But I mean, I understand that a recession you think won't impact them, but why aren't DeepSeek moments, and I use plural, why don't they cause you to rethink how much the hyperscalers might spend or how much companies in general might spend? And not only do we have DeepSeek, but we also had Ant Financial saying that it used chips from Baba as well as Huawei to train an AI model that had comparable results to using an NVIDIA chip for 20% less.
Part of the reason is that when DeepSeek came out at the end of January, is that was known for the public at that point. But the hyperscalers knew about DeepSeek before that came out, probably knew about it for 6 months. And they were still through that period. There was a couple earnings revisions where they continued to ramp that up. And so essentially the substance of this is that if you believe that the hyperscalers are competent, if they're strategic, if they understand how this tech works, they're basically saying what they've said over the last 9 months is that they don't believe that, or they believe that the scaling laws will hold together, that to continue to move towards general intelligence, that what we saw with DeepSeek was more of a head fake than it was relative to the substance of getting there. And so all these are use cases, these are powerful use cases for some, what I would consider tier 2 AI use cases, like with DeepSeek. But to be at that front edge, again, that's where the spending is cutting that front edge. I think it's still going to be robust for the next couple of years.
Yeah, and I think, if NVIDIA's at the front edge, which they are with these GPUs, they should still be a winner over the next couple of years, along with all these new verticals they're getting into, which is why Jensen keeps stressing humanoid robots as like the next big thing, because he knows they're going to make a lot of money off humanoid robots. By the way, we have a new video from Figure. We'll watch that after the open. They posted that yesterday with their robot walking more like a natural human being. So we are seeing a lot more progress. And then I hope to see what the Tesla Optimus demo looks like in Capitol Hill. And we're going to get politicians that get to see a bit of a glimpse of the future. Hopefully the robots are like doing something, even if they're not, that's not the worst thing in the world, but it would be nice to see if the robots are actually showing off in a certain way for these politicians. All right, here we go. We got 40 seconds until the market opens. We'll talk about Hood as well. We haven't talked about them all morning. I'll talk about my expectations for this event. They are down just a little bit in the pre-markets, 48.02. And so today will be a big day for them in terms of their trajectory as a company, their second annual gold event. And later tonight, we will see What Hood shows off, what Vlad's been. Oh, Vlad actually did respond last night on Twitter to someone about sports betting. First time we got a response. We'll look at his response in a second. But he finally acknowledged all the chatter about the gambling and etc. And so we'll see what he says as well. All right, here we go. It is 9:30 Wednesday, March 26th. We are traveling for the market open. And you know what that means when we're traveling for the market open. Ladies and gentlemen, the stock market is now open. Got to make sure to not wake up everyone at this hotel. All right, here we go. Wake your ass up. Robinhood opens up at 47.76. That's down about 1%. Palantir 96.45. That's down basically 0.02%. Google is down 1%. NVDA. If you missed the beginning of the show, the headline is that China may be stopping NVIDIA from selling their H20 chip because of environmental regulations, which would curb about $13 billion in revenue, or at least mitigate some of that revenue. That's why NVIDIA is down 1.86%. SoFi is down 0.5%. Tesla is down 2%. The S&P 500 basically flat. Apple is flat. Adobe is flat. Rocket Lab down 1.63. They do have a rocket launch today, so that'll be very important for Rocket Lab. The Trade Desk is down 0.5%. Rumble is down 1%. Nike is up a little bit. CrowdStrike down 0.5%. Applied Digital down 3%. Meta down 0.2%. Intuitive Surgical, that's up a little bit. Celsius is down 1/3%. Big Bear is down 2%. Bitcoin 87.6. Microsoft 394. That's basically flat on the day. Grab is up right now because there are rumors that they will be acquiring GoTo and they're taking out a $2 billion loan. That is a rumor that came out this morning from Bloomberg. If they are taking a $2 billion loan, it's likely because they're going to make that acquisition of one of the largest competitors in Indonesia, GoTo. And so that's why that stock is up 1.6%. Carnival Cruise is down about 0.33. Rivian's up 1.74. There was a headline on Rivian that we'll talk about in a second. That's why that one is up 2%. Marathon's down 0.34. PayPal's up a little bit. Where is MicroStrategy? That stock is basically flat on the day. NVIDIA still down 1.72%. The rest of the Mag 7 are red. Apple's red. Microsoft's red. Meta's red. Google's red. Amazon's slightly going green at 205. Tesla is down 2.2. Tesla's up 20% for the week, so that's not that crazy. By the way, talk about the reversal Tesla had yesterday. Tesla was down for the majority of the day. Last, I think, hour, Tesla goes up 4%. I mean, just an incredible performance this week by Tesla. And NVIDIA right here down about 1.79% here right now. We got a green candle on Palantir. Okay, yes, we do. 97.05. We hit 98 yesterday, got rejected at that level, closed at, I think, 96.30. Now back at 97. Would be really nice to see us make a run back to 100. Let's see if it can happen. But we are currently at 97 right now. Where is AMD? AMD is 115. Wow. AMD severely outperforming NVIDIA over the past week and really just showing momentum from 95 to 115. I mean, if you started bottom fishing at 95, you're probably pretty happy right here with AMD. So that one's doing its thing. Trump did say some stuff about tariffs yesterday. I think the exact quote was, I will only have a few exceptions. Or no, sorry. The quote was, not many countries will get a break. Something like that. He was basically saying like, yeah, like there's going to be some exceptions, but the majority of tariffs will go through. I don't know if the market believes him. And so he said that at some press conference yesterday. April 2nd is not that far away. We will officially find out how aggressive they are with tariffs. Robinhood right here down about 1%. GameStop up 12.7%, which is actually not the worst thing for Robinhood because GameStop is a top 10 holding on Robinhood. As embarrassed as I am to say that, that is a thing. And so one of the top 10 holdings up by 12%. That increases their assets under custody, increases their trading volume. So technically any rise in GameStop is good for Robinhood. But GameStop right here is up 11.4%. Palantir right here down about 0.4. So it lost that green candle. AMD still going green. NVIDIA is taking a doo-doo. Down 2.4%. There she goes. 117 we haven't seen in a couple days. Just got back to those levels. Quantum is up today. Okay. Rigetti is green, up 3%. IONQ is green, up 6%. D-Wave is up 3%. And then quantum computing is up 3%. So all the quantum names, not sure why that's happening. There's got to be some headline out there that's giving quantum some love. Oh, wasn't there a headline? Yes. So didn't Sundar say quantum's like 8 years away or something yesterday? Sundar said something about quantum. I think that's all actually what heard it yesterday. But I feel like we heard something like that yesterday. I think Sundar came out and said like quantum's not. He said 5 years, right? He said 5 years, right? He had a stat. He said 5 years. Well, it looks like the stocks are ignoring it, and they are going higher. Grab, baby. There you go. Up 4%. I did buy 1,000 shares yesterday on the airplane at 450, 456 was the price, because I got kind of annoyed seeing it drop 3% when the market closed yesterday. I was like, screw this. This is stupid. It shouldn't be here. But all right, getting some momentum there. 4%. Not too bad. Chat says 8 years or 5 years, all too low of estimates. Oh, wow. So we got a little quantum bear in the chat right here. Chat thinks it's far away. Look, I haven't invested in quantum, A, because I haven't done the research, B, because I also feel like this thing is not happening anytime soon. I mean, when you look at Rigetti, that's doing what is it in revenue? Like $1 million in revenue or something, trading at a $2 billion market cap. Like, it's a little aggressive, bro. It's like, all right, like, yeah, you can get a premium on your multiple, but you really haven't shown anything to get that premium unless quantum really is coming soon and they're the industry leaders. But I don't know if it's coming that soon. Don't know if it's coming that soon. Okay, here's the headline. Google Quantum's AI hardware detector predicts quantum computers will achieve practical applications within 5 years. Okay, so it wasn't Sundar. It was their quantum AI hardware director. But that was a headline that took it down a little bit yesterday. What's the Rivian headline? Good question. Okay, so the Rivian headline is... Also, we have a Google headline that we'll look at in a second. The Rivian headline is Rivian is spinning off micro-mobility unit into a new startup right now. Rivian has also spun out its micro-mobility division into a separate company called Also-Inc. That's a hell of a name. Also, Inc., which will focus on compact electric vehicles for urban and global transit. Rivian keeps a minority stake while Eclipse Ventures is backing the new firm with $105 million of funding. So basically, they're spinning out part of their business into a new startup. So the street probably likes it because it's less glut in the core business. They're calling it Also, Inc. That's a weird name, but yeah, the micro-mobility part of their business for urban transport is being spun out. Rivian right here is up 1% on that news. So that's what we got with Rivian. Okay, cool. So that's what we have on Rivian. All the quantum names still green. D-Wave just went red, so that's the only one that went red. The other ones are taking a little bit of a red candle, but still green for the day. Palantir holding on to 97, AMD 115.38, Robinhood 47.65, Google 169, GameStop, that's got a red candle down from 12 to 3. Tessie looking like it wants to go below 280, which I don't think anyone can complain about given the past couple of days it had. But if it can hold 280 today, that would be very telling. 3 days in a row of holding these levels. S&P 500 basically flat. Apple 224. Oklo is up about 1%. Coinbase up 0.04. Celsius down 0.4. And then Bitcoin at 87. Everything else is red, but it's not crazy red. It's just red. It's not like bloody red. Also, we've had 3 really good green days. So a little bit of a pullback. Some of that money leaving is not, or some of those gains leaving is not crazy. But, you know, it's like less than 1% down on a lot of these names. Rocket Lab about to go green. There you go. 2027 up from 1994. Trade Desk also about to go green. And then SoFi 0.5% away from going green as well. PayPal's green. Okay. PayPal's green as well. Here we go. PayPal 71.49. That one getting a little green. I agree with Steve's idea here, dude. Cut the dividend or cut the buybacks to an extent and give a dividend. I think that would be amazing for PayPal. And it would get people a little bit more excited. Where's SMCI? SMCI is 40.43. That's down about 0.48% here right now. So I asked this question on Twitter last night because I was on the airplane and I told myself, and more importantly, I told Steve I would start watching The Sopranos, and I downloaded the episodes on my phone and I was ready to watch it. And then I was like, I'm not going to watch it, Sopranos. So I said, this occupied like 4 hours of my time on the plane. I asked this question: what is one stock that you think does not get enough media coverage, but is a legitimate company that can outperform the S&P over the next 5 years? And I would love everyone else to answer this question as well in the chat. And I was reading about ASML. Shout out to Austin. Austin sent me some good resources about ASML. So I was learning a lot more about ASML on the plane. But I got a lot of good answers in the comments. I got a lot of good answers. And some of these answers I think are interesting enough to look at. One of those being, and I haven't really done any due diligence on this, but one of those being Roblox as one of the more interesting companies to look at. Roblox has outperformed over the past year. I think of it as like a gaming app that gets a bunch of kids to use it, and that's the extent of their TAM, like they're a video game product. I don't think it's that much more interesting, but there's a bunch of people saying you have to look at Roblox more seriously. Roblox basically up 5% right now year to date. Over the past year, it's up 65%. So maybe that's one we look at. Nebus, a lot of people mention Nebus as well in the semiconductor space, so that's important. Upwork got some mentions as well. Okay, for those of you saying Rocket Lab Hood or Palantir, I said a stock that doesn't get media coverage. Rocket Lab Hood and Palantir get plenty of media coverage. I'm talking about a name that's under the radar, but is still going to beat the S&P in 5 years. So I'm looking for names that like really aren't talked about. But the Hoods, the Teslas, the Palantir, they are very, very much talked about. TTD was mentioned as well. That one I got to do some more research in. I just feel like I'm not smart enough to buy it if it's down 50%, because it's probably down 50% for a reason. But I've got to look more into that. HIMS was mentioned a lot, but HIMS gets a ton of coverage, at least on Twitter. Maybe not on mainstream media, but it gets a ton of coverage. Axon's a good one, dude. Axon's a very important company in the context of body cameras that a lot of people missed after 2020, but this one has done incredibly well. So there are names out there that, don't get a ton of media coverage, but people are doing a ton of DD on to see if they can be outperformers over the long term. Palantir right here at 96.58, still green on the day, but just slightly green right now. Yeah, people did mention Grindr. Where's Grindr right now? Let's see. Dude, you guys can talk all the shit you want about Grindr, but got in at 14. It's at 18 now. I'm just like, I think they will have a monopoly on gay dating. Now, would I buy it at 18? No. Like, I just like with NVIDIA and Google trading at these, I would not be touching Grindr. But if you got it last year, and I really should have a $12 average because I got it at 12 and then I sold it at like $12.50. And then my Grindr urges caused me to get back into the stock at 14. So it's done well. It's done okay. Cloudflare, this was mentioned as well, dude. This one was mentioned. This one is a deeper SaaS company that I have to dive into. Are they down over the past year? They should be up. They took a nasty hit in 2021, but they had a bit of recovery. Yeah, they're up 12% this year. They're up 30% over the past year. A lot of these stocks I'm putting on my list to try to do more research on and get deeper into. NNOX, what is this thing? NNOX. Dude, these I don't want to look at the small caps. This is a $300 million company. Like, I want to look at companies that are a bit more established, have cash flows, have a little bit of cash on the balance sheet. I don't want to look at anything sub $3-4 billion bucks, or at least sub $1 billion bucks. That gets a little bit too slow or too small. Yeah, Fortinet's cool, but I would rather buy CrowdStrike, dude. Like what is the unique, like in this space, I feel like the winner is CrowdStrike. You buy CrowdStrike in cybersecurity, or you buy the hack ETF. Fortinet's a great company, don't get me wrong, but like if we're betting on the industry, I feel like you just pay the premium on CrowdStrike because they're going to be the ones that actually put up the growth that is important. But granted, I haven't done a ton of research on Fortinet. Steve was in this thing at 50. I think he sold at 75, but he was in this a while ago. But I feel like the leader in the space might be a little bit more exciting. Yeah, you guys are mentioning a bunch of these medical plays as well. The biotech ones, I've always been a little triggered by biotechs. And I don't know, dude, with pharmaceuticals, like Eli Lilly and stuff, like I don't care that much about pharmaceuticals. Like if I were to put in the portfolio, I would have to really start caring about these drugs and stuff. And like, I don't know. There's one drug I know and it's called Blow. And I do enough of that. So like, I never got really interested in like Eli Lilly or Novo Nordisk. It's probably why I missed HIMS as well. But definitely wouldn't be horrible to expand the portfolio and put that into the list. As long as it's not literally just biotech. Because literally biotech, probably you go the wrong direction. Okay, let's look at a couple other headlines and see what we've got going on here. By the way, I was kidding about Blow. For anyone who's new here, that's a joke on the channel. The running joke is I get all this energy because I do Blow. That's not true. Or is it? Who knows? Okay, a couple headlines. Mortgage demand. So In the United States, mortgage demand dips again as refinancing slides. Mortgage applications fell 2% last week, mostly due to a drop in refinancing. The refinancing index slipped from 752 to 794. The 30-year mortgage rate held steady at 6.71. That's down slightly from 6.72. So we got a slight deduction in mortgage rates, but we also got a slight reduction in the applications for mortgages, which is not what Scott Bessent wants to see. He wants to see a upsurge in mortgage applications, but in order to do that, he needs to see that beautiful 10-year to come down. Speaking of the 10-year, we are surging on the 10-year. We are surging 4.354. Of course, this is not good. This is not good for anybody, but we are surging on the 10-year, and we have to figure out how to deal with it. Kris, why are you spamming nice in the chat? Kris, I don't know what nice is. I've never heard of this thing before. Nice? $10 billion company? Okay, I don't know what that is. Kris, you got to come on the show one day and tell us what the heck is nice. I've never heard of this name. I didn't even know it was a public company. NICE. All right, that's the new one Kris is looking at, so he'll come on the show hopefully soon and tell us a little bit more about that. 160.80, that's up about 1.3% right here. PayPal 71.58. But yeah, in terms of mortgage applications, again, that 10-year spiking is just not good. TLT, by the way, if anyone thought that was safety, that's in the gutter. That hasn't worked out. I mean, like if you thought you could hide in TLT because rates were coming down, nope. It's been a weird market, bro. For the past 3 weeks, everyone thought that 10-year was about to fall off a cliff. And if we had to deal with a crappy stock market for it, so be it. But then we just reversed. It's like we bottomed. Sentiment got so bad. People started buying stocks. People probably started selling the 10-year. Tariff volatility kind of went away when the market stopped believing in Trump's constant accusations of different tariffs that he's going to impose. And then boom, you got a 10-year at 4.3. You got a stock market that's reclaimed the 200-day moving average. And you have an investor base that seems very confused about what the administration is actually going to do with their economic policy. And I guess April 2nd, we'll get more of a clarity on it, but I think everyone is still confused. Kris said, send him a StreamYard. Okay, let's send Kris a StreamYard. Get some comments on nice. It means rates are going up. Yes, it means rates are going up currently right now. Have you thought of buying TLT? I thought of it early in the year because I thought rates were going to come down. I didn't know Trump was going to do this whole let's crash the market to get rates come down type of thing. But I feel like still TLT is not a horrible buy because rates have to come down, right? Right? Like if rates don't come down, which would make TLT go up, like what we're going to pay $5 trillion of interest on the $36 trillion of debt we have. We're already paying $1 trillion. There's just no way, there's no way in hell I don't see rates eventually coming down. But I'm confused because I thought we needed some volatility in the markets to get it to come down. And we had some volatility, but we've kind of been able to recover from a decent chunk of that volatility. And so I don't know what the administration does. I really don't. And it's very kind of confusing to see how we think this is going to end up playing out. I would consider it as a hedge versus equity. Yes, I agree. I would consider it a hedge as well. And it's an obvious hedge against rates coming down. And then if the market falls, then at least your TLT is what saves you. But that has not been the redeeming characteristic of the current state of the stock market right now, which is the issue. Dollar Tree's selling Family Dollar for $1 billion. Oh boy, that is actually a headline right here. DLTR, that's up 3%. I didn't even know they own Family Dollar. Huh, that makes a lot of sense. It makes sense that that's a subsidiary of the actual brand. Yeah, Dollar Tree divesting Family Dollar stores for $1 billion. Oh wow, here's the actual stat. This is going to make you not want to buy Dollar Tree right here. They bought it in 2015 for $9 billion. They just sold it for $1 billion. So that right there makes it a little bit uglier, but that's a little bit of an $8 billion write-off that they're going to have to take on Dollar Tree. NVIDIA's down 3%. Yeah, that China headline's bad. That China headline is definitely getting them hit. For those that don't know what the headline is, The CCP came out today and they said, hey, we have all these new environmental regulations and we don't want NVIDIA chips that are not environmentally friendly to be purchased by the biggest tech companies in China, Alibaba, Tencent, etc. And so they want Alibaba to buy chips from Huawei, which meet the environmental regulatory standards of Beijing, which would curb the $13.7 billion of revenue that NVIDIA does in the country. That's not good. Now, I think NVIDIA will end up resolving this. I think this hopefully should be a buy the dip, but that is a headline that's definitely taking NVIDIA down right now. All right, let's bring one of our favorite guests onto the channel that has literally changed his name to Nice because it seems like he's getting that obsessed with this stock. Nice, what's up?
You got to look at this company, dude. It is in my opinion, it is really undervalued for all the stuff that it's doing. And then at the same time, their business model, their financials, and their counterparties are pretty legit.
Okay, before we get into it,
yeah.
is this like a heat of the moment? Like you saw it last night, you haven't been able to sleep. Have you been looking at it for weeks, or what's going on here?
It's a kind of like a 48-hour, just like doing a lot of research on it. And I'm just like, why is it this undervalued? And I haven't been able to find a reason just yet. So, you know,
okay. So here's what I'm gonna do, Kris, because I know we can't spend a ton of time on it. I'm gonna put 5 minutes on the clock. You do what you got to do for 5 minutes. Give us the pitch. We'll get some questions from the audience, but that'll give you the time to do a concise pitch on this. So,
all right. So the first thing is just what do they actually do? So they actually have call center software, right? So basically, if you're any company that's dealing with customers, which is like every single company, you need some level of automation to get you to that endpoint where you're working with the customer to get what they need done. Now, the thing is, you can design a lot of things custom, but these guys actually just provide the software and have like a cloud stack that does the whole thing for you. So let me just share 1 second. Stop sharing this screen. Let me just share.
Beneficial says Chewy uses Nice systems. Okay, so it seems like a lot of companies are using their.
Yeah, once you see it, you won't be able to unsee it. So let me just share my window. Where the hell is the Chrome tab? Okay, there we go. So click on, there you go. Share my screen. These are all the technology partners that it has. Okay. It's got integration all over the place. It's got cloud so that this way, all the stuff that it's doing is like, is stored. And then that increase in basically data feeds right back into their cash flows, and their cash flow is heavy. So look at their technology partners, look at their counterparties. So they are all over the place. Like they are on the top of the top when it comes to this specific market. And if you look at like even on Gartner, their the ratings, they're at the top line for data for that call center like market, right?
So hold on, do they have a software that call centers use to call people, or like is this AI?
No. To basically address things like right now, let's say you're having trouble with Verizon, right? You call Verizon, right? What ends up happening is it gets routed through their, like the press 1, press 2, whatever. Yeah. But basically, when you're saying something like I have a problem, blah blah blah, it basically gathers all that data and gets that information to the customer, to the other person on the other side, and makes a transaction as fast as possible and makes it easier. So, like you're looking up your account, you're looking at problems in the past, all of that stuff gets put into this. So, and all of it is a lot of it is in cloud. And then they also have now integration with a bunch of AI stuff. So if you're talking about like dealing with customers, this is the company that's like just everywhere. So this is the first thing to look at. And outside of this, one of the things that we really need to look at is their financials, because I think the financials, once you see those, you won't be able to put it down. So let me just share that screen real quick. Share screen window.
Well, before you do the financials, I guess the elephant in the room is why doesn't AI agents like kill the business?
What do you mean? Because designing a custom AI agent is not the easiest thing. Like, and not to mention, it takes a lot of work to design AI agents. Like, this is just quick. Hey, listen, I need a product. You integrate it, and it's like right out of the box. So let's look at, let me just minimize this. So if you look at their business, their revenue growth, right? Like net income wise, net income literally up and to the right. Okay. If you look at their operating cash flow, up and to the right. Okay. Look at their if you look at their shares, like shares outstanding, all that additional cash flow, because it's a software business, their EPS is growing at a really fast pace. And next year, they're projected to actually double their EPS. And if you look at their shares outstanding, they're buying back shares at a pretty fast pace in recent times. So literally, there's like 65 million shares outstanding, and they're spending a good portion of their additional cash flows right back onto share buybacks. So if you go to right here, their share repurchases, look at this. They're doing right now almost 370 million in share buybacks. Okay. And this is only a $10 billion market cap company. All right. So it's a great business, great margins, and it's doing phenomenally well. Nice, consistent growth that's actually accelerating a little bit. And recently the market's kind of sold them off. So if you look at like last 5 years, since 2021, they were at about 306. Now they're trading at about 160. But if you look at their forecast going forward, it's looking like it's going to be pretty high in terms of EPS growth. So, yeah.
That's exactly 5 minutes. Cool. All right. So, okay. So I want to keep you on to talk more about macro, but last question on NICE. Is there a moat in your opinion, or are the numbers just exciting to you?
The numbers are exciting, and I really have to do more research on it. So I'll defer that question,
Okay.
especially because I have to really dig into the competitors. Like it's easy to dig into the company, but then you also have to dig into competitors and how the AI is going to impact it. From what I can see, AI is actually a tailwind for them, and they're growing at a pretty fast pace. So we'll see.
Right. All right. Well, NICE is on the radar now for people to look into it if they want to. Kris, in terms of this macro, we're kind of tanking a little bit. Certain stocks down 3-4%. NVIDIA's down 4%. Robinhood's down 4%. Do you believe the 3-day rally we've had, and do you think it's sustainable after April 2nd?
I mean, it's all going to depend on April 2nd, right? April 2nd right now is going to be quote unquote Liberation Day, in which case we'll get a more of an understanding on how big these reciprocal tariffs are. So I was watching the BG2 podcast with Brad Gertzner, and Brad was telling, it's like a lot of people are overestimating just how big of an impact these tariffs really are going to be. And so I was doing the math too, and I was just like, the one that's probably going to be impacted the most is China. Outside of that, the other countries are probably going to be a lot more like focused. And so I think the Trump administration is really going to hammer China. But outside of China, and you can even see the administration kind of walking back some of the comments that they made about, giving exceptions and doing X, Y, and Z. So I don't think it's necessarily going to be as bad as people think. And once the data is revealed and what their actual like tariffs are going to be, I think the market should rally a little bit going forward. My bigger question that I'm trying to deal with right now is this market is draining liquidity from US markets, and it looks like that money's falling into the other markets in the world. So the thing is, does that mean that we're likely to get some level of compression on our multiples going into this year, maybe even next year and the year after that? So if that's the case, then maybe we should be dialing back some of our estimates for US companies and start looking for opportunities outside the US. I've always been looking. That's why we found companies like Grab and Nubank and everything else. So you want to kind of diversify outside of just the US. The other thing that I'm somewhat concerned about also is one of the biggest proponents of index investing, Warren Buffett, has been selling that.
Selling what?
The index.
Oh, yeah, the index. Also, he's been selling his real estate stuff, dude. Do you have a take on that?
I kind of do. But first, let me talk about the indexes. I think there are companies within the index that are heavily weighted, especially among the Mag 8, that are definitely overvalued. And because of that, they take a sizable portion of the index. So I think his logic is in a margin compression scenario and also like a reciprocal tariff scenario, some of these other companies might end up losing. So the two main ones you're looking at is, of course, Tesla and NVIDIA. because they're directly impacted from some of the international demand. Like right now, China just said, you know, with the whole not thing with limiting chip imports, that could impact NVIDIA. And if NVIDIA goes down and it's such a large portion of the index, that means that the performance on that index is going to be lower. So if you look at the overall valuation on the index, and if it's heavily skewed towards these mega caps, that means that, you know, the index might actually underperform. So this is where you have to be a little bit more focused on.
But is he selling because he thinks like we're in a freaking bubble and we're gonna crash, or like what do you like?
I think he sees just more, like less risk by being in things like cash and treasuries, right? If with cash and treasuries, you're getting at least a 5% yield right now. Well, not 5, like let's say 4 point something percent yield. You know, if it goes down and up, down, they can do more stuff with it. But that's the thing. Right now, it's capital preservation. And we'll see where he goes. I mean, he's been heavily into Japan, and Japan's been doing well. So I'm not sure where else he's going to deploy that capital. I think real estate, especially housing, is due for a really big downturn. Like affordability is a major problem. And I think the Trump administration is likely to want shelter to come down significantly. Because if you think about like the average American right now, a good portion of their income is going towards shelter expenses.
Right.
And shelter expenses is one of those things that, like, you know, is driving people crazy, especially if you're a renter and you're seeing rents like, and half of your income is going towards rent. It's not exactly a great place to be in terms of like consumer confidence. So I think one of the goals is going to be to basically create policies around more building. I mean, if you see all the policies around HUD is about let's build more, let's cut, you know, let's cut housing subsidies for, you know, like for illegals and stuff like that. So I think for the average Americans, making housing more affordable is probably going to be a goal of this administration.
But Kris, how do you make sense of this tenure, right? Like they've got to do something. They can't just keep letting this spike up. There's no way housing gets more affordable if this happens.
Well, that's the thing. I mean, these tariffs right now, if they dial back on the talk on these tariffs, the 10-year should start to come down. But more importantly, I think unless short-term rates start going down and the projections start going up on the number of cuts, you're going to see the 10-year stick around this four level, you know? So like right now, Bostic came out and said, oh, we're only going to see one cut. That doesn't help the case on dumping short-term treasuries and buying long-term treasuries and terming it out.
Yeah.
So the whole thing is, and I mean, even Trump right now has basically come out and said the Fed should be lowering interest rates, you know? So I think the next target after tariffs is going to be lower interest rates. So I think these guys are very methodical on how they're approaching everything. Right now, the first thing is let's do tariffs. The next thing is let's do interest. And if they get interest rates down, and I think they're going to be pretty successful, because if you look at rent inflation has been on a downward move. And once those numbers get factored in, it's going to help out PCE numbers significantly, in which case I think a lot of people are going to basically go back and say, maybe we're actually going to get 3, maybe 4 cuts.
Why do you think we're dumping, not on the index level? Why do you think certain stocks are getting hit? Do you think the last 3 days have just been too good of a run, and that's why they're getting a pullback? Or,
I mean, you know, the market moves in whatever direction the market wants to move. I haven't read any headlines that would spook me on any of the stuff that I'm seeing. So maybe this is just the market saying, you know what, April 2nd is coming closer, and we don't want to deal with the uncertainty of whatever is coming. And so, you know, let's be a little bit, you know, on the defensive side, you know?
Yeah.
So, yeah.
I know you said, you know, you told me, I think 2 days ago, Tesla is colty and that's why we've seen this run. Do you think there's any logic behind the Robotaxi coming out soon and that's why it pumped, or anything like that?
No. Tesla doesn't, like I said, Tesla doesn't trade on fundamentals. It trades on sentiment. So if sentiment goes in their direction, it'll go up. You know, for me right now, when I look at the companies that have like a lot of possibilities going into the future, I mean, you look at Google, dude, I am seeing Waymo freaking everywhere. You're in San Francisco, right?
Yeah, I haven't tried it yet, but I'm going to try it today. But there's a lot of them, like a lot.
Dude, you got to try it, do a video on it, and let us know. Everywhere I look, you know how they say with what is that thing called? Like social capital and not social capital investing. What's the thing that what's this
Social arbitrage.
social arbitrage? Brother, I am seeing Waymo content everywhere.
Mm.
And right now you're in San Francisco. You tell me, you get in one of those things. Is that the future? Because if it is, then Google is looking at probably a 200 to maybe $500 billion market cap company sitting in its sidelines.
Do you know what the valuation? I know they just raised $5 billion. Their value 45 billion.
Yeah, they're about 50 billion according to the last raise from what I saw. So if you think about it, Google could be a very, very big disruptive force when it comes to ride hailing. So,
and the street's not really giving Google a multiple at all on ride hailing, right?
Yeah. It's not even like Google search is generating a ton of profits. Cloud is literally doubling on its operating income every year right now, and it's almost at 6 billion in operating income. All of these other value-added services, I don't see any replacement for YouTube. I don't see any replacement for all this other stuff. I see them integrating more AI products into their workspace area, which they're going to eventually sell to enterprise. I mean, bro, Google's on just another level. I feel like people are just so scared of Google getting disrupted by AI. But I don't know about other people, but I still search for stuff on Google.
I use it every day still. Every day.
Yeah.
All right, cool stuff, Kris. Last question for you. I think you saw the headline: Grab's looking to raise about $2 billion in debt to potentially finance this GoTo merger. Do you think this would be a really big deal for them if they can get it done?
I mean, I think so. They're very well run, and they've got the cash flow to basically support the transaction. So, whenever it comes to debt, the question that everyone has to ask is, do their cash flow allow them to service the debt? And I'm sure that there's benefits of scale that they're going to be able to get by stripping out costs. So when you acquire these things, you're basically getting a customer base, and then you can strip out costs and basically bolt on the company. I'm not so sure what's unique about GoTo. The only question that I have is, I wonder what the regulatory environment's going to look like for these guys. Like, why would the regulators approve that?
Yeah. No, it's fair. I think if they're getting ready to get a loan, I think they have the regulators ready to approve it, because you don't get a loan if you don't think they'll get approved. But that is still a question. Will they actually allow it to get done?
Yeah. If I was Uber right now, bro, I would stop buying my own shares and I would just buy Google shares. I mean, this is, in my opinion, this is like the Netflix Blockbuster moment.
Really?
Yeah. I mean, imagine right now, Netflix, like Google just bought Netflix. Like how much better off would Blockbuster shareholders have been?
You think Uber's a dinosaur? You think they're just going to die out?
I don't think they're going to die out, but the thing is, like, Uber's main competitor right now is basically Lyft, and they've basically dominated the market, right? But by basically working so closely with Google, they're able to kind of like work on the synchronous business plan together. And the thing is, the value that Waymo is probably going to end up getting is going to be pretty substantial. So the thing is, if Uber buys a lot of Google shares right now with all that additional free cash flow, what ends up happening now is that in the future, it's likely that Google just buys up Uber, and it's almost like you're getting your own shares back at a cheap price. So fair. And Uber shareholders would get a massive premium, So right now, if you look at Uber is a great company, but you'd have to, like I said, as a CEO, you have to be very strategic and say, can you beat Waymo? You probably can't, because you already gave up on your own AI, taxi cabs or whatever. Your drivers are a significant portion of your cost. But the thing is, like right now, your users are your actual assets. So why not, play the game right? Buy Google shares, get to the point where you own a big portion of Google, you get on Google's board, and then basically you negotiate a buyout with a significant premium for Uber shareholders,
Jason Calacanis made this prediction a couple months ago as well, that some big tech company would buy Uber. So, I mean,
once again, it's about regulatory and like problems, right? The challenge that you're always going to run into right now with the mega caps is that anything that they buy is going to be heavily scrutinized. So I'd be surprised if, you know, if it was allowed, because Uber is like probably the largest ride hailing app. And so if you basically acquired Uber, then ride hailing would be dominated by Google.
Right.
So.
All right, Kris. Thank you. Appreciate your comments. Chris's Twitter right here in the chat. I will check out that Waymo and let you know how it goes.
Thanks, dude. Later.
Later. All right, cool. Market's little dumpy dump action right here. There's not any macro reason why or any headline reason why. I mean, some individual stocks have some headlines, but Robinhood right here down 3%, Tessie down 4%, Palantir down 2%, and then good old NVIDIA down 4% as well. Yeah, I don't know. I think it's the NVIDIA headline makes sense why it's down, but everything else is kind of random right here. Let me tell you, covered calls have been printing, dude. Covered calls have been printing. Even those covered calls on those Google long calls. Yesterday, Jason was like, well, you know, 175 could be scary by Friday, which is like every time you think they're under pressure. Yesterday, they were at 171. They were under a little bit of pressure. Now Google's at 167. It's like, and there will be a moment where those covered calls do get underwater, but this is like my third round of covered calls on Google. It's been great. Like, it sucks because your equity loses value, right? So, but at least you get to save a little bit of some of that value with the covered call premium. But every time you get a little bit of run in this market, we just get a bit of a pullback here. I don't even know if you want to say this is a pullback. This is 1 or 2% down after 3 really good days, but it definitely is a little bit of a dump. AMD as well almost was trying to hit 117 this morning, now back at 112.19 right now. Ruda says, I have covered calls on Robinhood for this Friday, so I like the small dump. What's your strike, Ruda, for covered calls on Hood? Let me guess. Your strike's at like 52. I'm going to guess. It's like low 50s. I don't know, bro. Whatever they announced today, who knows what they announced today? Because last time I was at the gold event, I got invited a day before. They like randomly were like, hey, just show up to this event. And I came through. And then that's when Vlad introduced the credit card and the 1% deposit, all that stuff. And I just peek a look at my phone during the event, and I see this thing blast through 20. And it was the first time in like 3 years Robinhood was above 20. And like the market really liked it. So if they can introduce something today or a string of products today that the market really likes, in this market, does it really matter because Trump says something tomorrow and then everything takes a hit? But fundamentally, maybe Hood can get a little bit of juice today if they announce something good. $50. Okay. 50. I think 50 is going to be, unless the market really likes what Google's or Facebook or Robinhood says today, I think 50 should be okay. And even if you do get to 50, you could roll it to like 52 for next week or something. But Robinhood right here, 46.68 here right now. Tariq, thank you for the $20 super chat. Really appreciate that for the Waymo ride. I will definitely make sure to take a Waymo today. I will give you guys all my thoughts tomorrow when I take it. So thank you, Tariq, for the generous $20. And yeah, I'm excited to get into it, dude. I saw them yesterday. I was going to take it yesterday, but we were only 5 minutes from the hotel, so it didn't make sense when we were walking back from dinner. So today I'm going to take it and let's see what I got to do. Dude, I have to buy an outfit. I don't have an outfit for this event, so I have to like go to H&M or something and buy an outfit because I don't have anything to wear. So I'll try to take a Waymo there and see what it's like. Bitcoin right here getting hit as well. 87,000, just below 87. Where's Celsius? Grab's the only thing that's green. Grab and Dollar Tree are green on the day. Celsius also just turned green. Celsius 35.27 here right now. Wait, what's wrong with H&M? H&M's like, don't tell me you guys are hating on H&M. H&M has decent quality, semi-casual, semi-formal event clothing. I don't need to go to like some tuxedo store or something. H&M's legit, bro. I've been shopping at H&M forever. H&M, I feel like, is very legit for these types of products. Wear the big boots. Dude, I'm going to be shorter at this event because I can't wear the big boots. That's why. Why can't they do these events in New York, bro? Like, do it somewhere cold so I can justify wearing the boots. I can't wear the boots in 70-degree weather, dude. Oh, by the way, San Francisco's weather, it's beautiful. I got at the airport. It was just beautiful. Past couple times I've been here, it's been freezing. Yesterday was actually gorgeous weather. Just amazing. So hopefully that is the same for the next couple of days. So Cold says H&M closed tear in 2 days, ends up being a waste of money. Better off shopping at Ross. Interesting. I've had a good experience with H&M my whole life. Now, granted, I tend to buy pants from H&M more than like shirts. Their pants are like, I don't know, they're good quality pants, like slacks versus shirts, but it's not the worst in the world. Dude, you guys are gonna hate me about Lululemon. So when I was at the AIP Con Pounters event, I needed a hoodie because I just didn't have a hoodie, and I needed some type of a hoodie. So it you know, like I there wasn't that many places around, so I went into Lululemon, and I found such a good quality hoodie, bro. Like just like one of the most amazing black hoodies. It just feels good. It's like you can wear it. It's the right fabric. And then I go up to buy it, and she's like, it's $150. And I'm like, you know what? I'll buy it, and then I'll return it when I get back to Jersey. Like, it's no big deal. You know, a 14-day return. And then I wear it the whole week there, and I'm like, dude, it's a good hoodie. This is a good hoodie. Like, this is one of those. But I'm like, did I really just spend $150 on a hoodie? Like, I've got to be out of my mind. And then I thought about returning it when I got back, and I'm like, it's a really good hoodie, bro. Like, I don't know if it's a placebo effect, the fact that I think it's a good hoodie because I paid $150, or that if it's actually that good of a hoodie. But yeah, your boy bought a $150 hoodie, and I feel disgusting about it. Now, granted, I got 3% back for the Robinhood credit card, but I legitimately felt disgusting, bro. I was like, I cannot believe 150 bands on freaking a hoodie. But like, it was raining, so I just needed something, dude. Like, I couldn't just wear regular shirts. So, but I was like, I'll return it. And now I'm just like, dude, I'm wearing this hoodie for the rest of my life. Like, GameStop's up 15%. Talk about a pump after declining revenues 30% year over year. But the street likes it right here. Up 30%. Yeah, that's 4 shares of Hood, bro. I told myself I would return it. I was like, there's no way in hell I'm going to have a $150 hoodie. But it's just great quality, dude. Sometimes you pay up for a little bit of quality. Elaine says, I love their clones. They last forever. Yeah, sometimes you pay up for quality. My friend bought Lulu shorts like 6 years ago. Last year, the shorts got burnt in the dryer, and they gave him a new pair for free. That hoodie was legit, bro. If that hoodie ever burns, hopefully they'll give me a new one for free. But the reason I struggle to say this is because I'm the guy who shits on like the amount of times I've gone to Lululemon's website and shitted on all their prices. I'm like, who's buying this stupid shit? $70 for a crew neck. And then I end up being the person who buys it. But I don't think I'm ever going to shop there again, bro. Like, the prices were ridiculous. Like, I needed a hoodie, so I bought the hoodie, but everything else was just ridiculous, dude. It was a bit aggressive. FedEx right here is up 1.2%. Reddit's down 5%. That's how you know we're getting a little bit of a red day. I mean, Reddit's very high beta. If Reddit moves down that much, market's definitely selling off. Palantir down 2%. Tesla down 4%. Is the S&P really selling off? The S&P is down 1/3%. We got about another 2% before we lose the 200-day moving average. Or sorry, 1%. So hopefully we can stay at these levels. I thought a band is 1K. Actually, you guys are right. A band is 1K. Imagine I spent $150,000 on a hoodie. Dude, if I ever spend $150,000 on clothes, you got to be rich to do that, bro. Like, really rich. But see, the good thing about people that are really rich, like a Buffett or a Zuckerberg, they spend nothing on their clothes, right? Like, they're wearing regular t-shirts, like they don't have a Rolex on or anything like that. They spend money on a lot of other crazy shit, like building nuclear bunkers and stuff. But in terms of the flashy lifestyle, I've never seen like the billionaires really care that much about it. Some of them do, but a lot of them are just kind of not caring about showing off how rich they are. Yeah, that's some Chamath shit. Exactly. That's some Chamath shit. Vertiv down 10%. Wow. Well, I forgot the NVIDIA proxies should be getting hit today, right? Vertiv, there you go. Vertiv and VST, both 9% and 4%. Goodness, NVIDIA, bro. They're really going to take her below 115? Really? Are they really going to do that on this China headline? My goodness. Oh my gosh, dude. It's just so aggressive for no reason. Yeah, this is a little bit of it. Look, it's about to go below 115. There you go. It's about it. There you go. 114. There she is. There she is. It's fighting for 115 though. It's not easily giving you 114, but it's fighting for it. All right, screw it. We're gonna buy 10 shares of NVIDIA. Let's take a nibble on this. Down 5%. We'll do 10 shares. We'll do another 10 if we get below 115 into like the 113, 112s. All right, boom. 115.02 on NVIDIA. We got to build up the 1,000 shares eventually. We are now at 860 shares at an average of 121.72. All right. We'll buy another 10 today if we really get hit more. But there you go. Down about 5% on NVIDIA. Grab right here, 471, 3.85. S&P still down a third. And then Hoodie below 46. I mean, it's going to go down if the market goes down. So that makes sense. And then TLT as well. Not being any safety here today either. Bought this morning under 117. Yeah, I thought 117 would be a little bit of a bottom too, but the fact that we just saw 114 is just NVIDIA. Dude, everyone has been unsuccessful calling the bottom on NVIDIA. Literally everyone this year. It's just been a hit. All right, I think we have some news on tariffs. Let's get an update on this, and then we'll keep going from there.
Yeah, Carl, that's right. The president, speaking to Newsmax yesterday, said in terms of the April 2nd tariffs next week, he's inclined to be more lenient than reciprocal, because if he is too reciprocal, then that could be too tough on people. So I talked to a White House official this morning to figure out what exactly that means, more lenient than reciprocal. And what I'm told here at the White House today, Carl, is that what the president is signaling here is that he is not going to take into account all the non-tariff barriers that countries raise against the United States. Remember, early on in this debate, the White House said that they would include things like a VAT tax, wage suppression, currency manipulation, those kinds of things in their calculation of a tariff attack on the United States, and therefore that would be part of the reciprocal tariff back. Now what I'm told is that they're signaling they may not go all the way to including all of those non-tariff barriers.
That's bullish. That's good. Like, why is the market dumping? This is good.
In determining what the reciprocal tariff rate should be country by country. How are they going to decide that? I'm told it's more or less going to be on a case-by-case basis, but what they're signaling is that a lot of the stuff they said they would calculate against, they may not actually calculate against. So it is a sort of lessening of the severity of the potential tariffs that we're talking about based on what they had said before. Now, there were a lot of critics who said, as our Megan Casella points out, that some of these non-tariff barriers should never have been included in a discussion of tariffs. Nonetheless, the White House signaling today they might not go all the way in including some of those non-tariff barriers next week, guys. Back over to you.
At the same time, Eamon, we do have, and this week, for example, the introduction of these new secondary tariffs, particularly vis-a-vis Venezuela, and the copper, for example. Some headlines today suggesting that those might be moved up in a matter of weeks, not months. Copper is on the move today.
Yeah, that Venezuela one is important, Carl, and I think the market needs to digest the implications of that. I asked the president about that on Monday. He told me that when he's talking about secondary tariffs on Venezuela, that's an additional 25% of tariff on any country that does business with Venezuela. That includes China. The president told me that that 25% tariff will be on top of the already in place 20% tariffs, to imply a 45% tariff on China next week, unless China stops buying Venezuelan oil between now and then. So that is an enormous.
Does anyone believe that's going to happen? Does anyone believe he's going to put on 25% and 45% tariffs on China? Like, I just don't believe this. And if he is serious about this, I mean, I think we can kiss this little market rally goodbye. Like, you can't do that. So I don't believe this at all. But if he is serious, this is not going to be pretty.
Thing for global markets and for global trade. We'll see whether it comes to pass. But the White House is saying they envision a 45% tariff on China next week, unless something changes with.
Bro, 45%? What? Like, I don't know, dude. It's 45% on the country we import the most stuff from. I don't know, dude.
Venezuela and with the oil market.
I feel like there's going to be a lot of diverting of oil. I mean, Venezuela, like they can get
Sure.
around that probably. They have
Yeah,
other
there's a lot of
sources
shell game
oil.
you can play, right?
So, but Eamon, on this news that you're talking about, the non-tariff barriers not being included, so that could be a really big deal, especially for Europe, because you mentioned the VAT tax, also the Digital Services and Markets Act, which he has referenced as a non-tariff barrier, where they punish our big cap tech companies, that sort of. I mean, it feels like that would be good news for Europe if it comes to pass.
Yeah, and I'm just going to read you a list here. This is from our Megan Casella, who points out that a number of things that they listed early on in this debate as non-tariff barriers include taxes, including the VAT, non-tariff measures, including subsidies, burdensome regulatory requirements, exchange rates, devalued currencies. They told me that also included in that calculation is wage suppression in a given country. Those are things that they had been signaling early on that they would take into account, and now they're signaling they'll no longer take into account, or maybe not 100% into account. Where that lands is a totally open question as of right now. So I don't think you can take any of this to the bank, but you're just, in terms of measuring the needle on where tariffs are going,
Right.
This is signaling we're not going to quite go all the way to the limit of what we said we might do earlier in the year.
Well, right. It gives us a little color on what leniency might look like.
Right.
I guess, Eamon.
We're trying to understand what the president's comments yesterday were all about. That's as best we can do.
Well, something that the market has taken heart in the fact that it will be more lenient and not worst case scenario, I think, with tariffs in the last few days. Eamon Javers, thank you very much. Wonder if that also includes Ireland's sweetheart tax deals, for instance, why all the pharmaceuticals are made in Ireland.
And China as well certainly has to figure into that in terms of wage suppression or lack of pollution control and regulation.
Subsidizing industries.
correct.
I mean, everybody does this stuff, right?
Well, including us to a certain extent.
Well, we subsidize from chip manufacturing, for
Absolutely.
instance,
Or
which is
even
actually
EV
something he wants to
makers.
get rid of. But here's the backdrop. I have this great chart today from Deutsche Bank, and I feel like the White House should really use this because it's a good indication of how imbalanced the world is. Okay, we're just looking at the left side of the chart here, and this is U.S. versus China market share of manufacturing in the world and of global consumer in the world. So as you can see, the light blue bar on the left, share of global consumption. The U.S. consumer, which we always talk about, so powerful, drives the world. It's almost 30% of world spending. And China's is only 12%. And on the flip side, our manufacturing is half of the contribution to global market share of China's manufacturing. That's basically the point of this. They provide a lot more market share of global manufacturing and very low consumption. This is the big imbalance that the Trump administration wants to fix. And we've lost a lot of market share in global manufacturing and our contribution to GDP to China. And that is ultimately the problem. Can he do that in a matter of years by putting on all of these tariffs and incentives to manufacture in the U.S.? That remains to be seen, but I think that is the ultimate goal here, because while it's been good certainly for the wealth of the United States, for our market, for some of our companies to have free trade like this and to open up, and to get more manufacturing abroad, I think there are parts of the United States that have been left behind, and that's.
Oh boy. 45% tariffs on China. I don't know, dude. I don't know if that ends up playing out. S&P 500 down about 0.4% here right now. Again, the same narrative about manufacturing and the United States becoming a manufacturing powerhouse. It's just a question of, is that the type of market that we want right now? Or sorry, the type of industry that we want in the United States? Or is that just going to lead to higher costs of goods and really not that many good jobs if we switch to trying to become the manufacturing powerhouse of the world? Like, whatever decisions we made back in the 90s to allow the offshoring of labor to get lower costs, those decisions have been made. And to reversal those decisions to make America a manufacturing powerhouse, maybe it'll work, but maybe it won't. And I guess we got to see how it ends up playing out. Noto just tweeted at the administration. He said, Someone said, Anthony Noto, if you haven't watched the Howard Lutnick Olin interview, the administration wants to work with companies directly and in return get a piece of stock upside from the sovereign wealth fund or the Social Security fund, student loans, payments. Noto says no one's better to do it than SoFi. And he tweets Elon, Lutnick, and Trump. You know, that is really interesting. If they do get rid of the Department of Education and there's a lot of student loans that have to be managed and SoFi can come in and take on a bulk of those loans and issue them and navigate them and just meaningfully manage the amount of loans that are there, you can have an argument for SoFi actually seeing that as a tailwind. Now, granted, that depends on the Department of Education going away and a lot of those loans shifting to the private markets, which, again, I don't think he's going to get congressional approval to get rid of the Department of Education. You know, I heard a stat that was really interesting about this. Ronald Reagan ran on the idea of that. That's when he won like 48 out of 50 states or something. That's when it was like a complete sweep. And they had the House, the Senate, the executive branch. Back in the 80s, he ran on the idea of getting rid of the Department of Education. It was like 1 out of the 10 major things his campaign focused on. And even then, they didn't have the votes and the willpower to get rid of the Department of Education. And that was off of a presidential campaign that actually talked about it on the campaign trail. I mean, Trump never really talked about the Department of Education. Like, he never liked it, but it's not like it was an issue like tariffs to him. So the idea that we get rid of it in 2025 when we couldn't in the 80s, and there was a lot more political capital from the country to get rid of it back then, it feels unlikely. Robinhood, by the way, getting a nice little tank, down 5.15% here right now. Doesn't mean you shouldn't keep trying. Yeah, look, I mean, Trump can keep trying. I'm just trying to be practical here. I'm like, is it happening or not? That is my biggest question. Is it going to happen? And for now, I don't know if this would end up happening. Maybe SoFi can originate the loan for Grab. Dude, Grab's the only green one here. Grab, Celsius, and Dollar Tree. They're green on the day. Rivian's a little green. IONQ's a little green. GameStop as well. I forgot to mention GameStop, dude. 15%. If you bought it yesterday right before, I mean, they're losing 30% year over year in sales. But now everyone thinks they're going to buy Bitcoin because they approved Bitcoin on the balance sheet. And so you got people buying it up just based on that rumor. Which is why I think they should have bought Bitcoin a long time ago, dude. Like they didn't, they're not doing anything with the cash and they're not changing the business. They're not giving you a plan on how they're going to use the cash to finance the restructuring of the business. So the best thing you could do is buy some Bitcoin. Like, it increases volatility into the stock. It gets the market a bit more excited. And then, I mean, Bitcoin is the best performing asset of all time, right? Like, if you're a company that has nothing going for you, like MicroStrategy, 5 years ago, MicroStrategy was going to go bankrupt during COVID. And Saylor found Bitcoin. He found Bitcoin. Fed's Kashkari just spoke. After 2018 tariffs, we saw less reshoring of manufacturing to the U.S. than other countries. Okay, so that's actually a bullish thing about tariffs. Where is Kashkari speaking live somewhere? I don't think he's speaking live, but we're getting some updates from him. Okay, so Kashkari, a couple comments from him. He says, we made a lot of progress bringing inflation down, but there's more work to do. He says, policy uncertainty is complicating the Fed's job. He says, the job market has stayed strong. The biggest challenge is to finish the job. And he said, relative to other countries, the U.S. is relatively insulated to trade dynamics. He is going the opposite of Bostic. Bostic was a bit more bearish on the tariffs. Kashkari is actually giving the Trump administration some credit around the offshoring of jobs being mitigated by the increase of tariffs. Oh, by the way, we didn't get to talk about this yesterday because I think I just forgot to mention it. But there was an update with India and tariffs that was actually pretty damn bullish for the Trump administration. Yeah, so here's the headline. India is eyeing a tariff cut on $23 billion of U.S. imports that are currently being tariffed from 5 to 40% right now to avoid the Trump reciprocal taxes. That was the headline we got yesterday. So, I mean, there is an argument that, like, yeah, whatever threats he's putting out there are working, given India is one of the countries that's tariffing the shit out of America. And, like, it's aggressive tariffs. So if they're willing, 23 billion is small. Like, we do a lot more trade than 23 billion. But the goal is to protect about 60 billion of exports from reciprocal tariffs by cutting tariffs on $23 billion worth of goods. I mean, that is what you want to see with all this playing out, which is maybe why Trump is so gung-ho about tariffs, because he knows that he can get these concessions, but he's not actually going to implement the tariffs, which is why every dip is a buy the dip. If we're going to get better trade deals without having to reciprocate aggressive tariffs, that just means we win all across the board. And like, if other countries lose less revenue, that's their problem, right? But I think everyone's like trying to figure out, is that how the story is going to play out, or is he actually going to put 45% tariffs on China? And I guess April 2nd we'll get a better understanding of how this is playing out. MVP Sports says, I was down 3,000 shorting Tesla until this morning. What a wild roller coaster that was. Back to break even. I'm out now. Yeah, I mean, the Tesla short percentage has increased ever since it took a nasty dip. I still think, I mean, look, I don't know if we get back to 215, but if Tim Waltz really did call the bottom, that would be just a funny story. Tesla right here down 5%. We had 291 yesterday, bro. We hit 291. Like, very close to 300. That would be a hell of a comeback. But it's taking a little breather here right now. What else? What else? Is the market looking for a reason to sell off before April 2nd? Yes, that could be another reason that's playing out. H&M price is about to go up by 45%. H&M gets most of their stuff from Bangladesh. That's where they get most of their stuff from. They probably get some stuff from China as well, but that area produces a lot of clothes for the West. NVIDIA right here, 115.20. All right, so we got to 114. Did anyone get 114.46? I didn't even see that. So I bought at 115.02. It got to 114.46, and then it bounced heavy. And now let's see if it can hold 115. Look at JP Morgan. Financials have also been an interesting spot this year. JP Morgan's up 1%. Year to date, JP Morgan's up 6%. Let's reload the heat map for today. Tech is down, of course. Dude, here's a question. Did anyone think the Mag 7 would not be as dominant as they were in 2024? Because I got that completely wrong. I thought everyone was saying, oh, there'll be a rotation at a large cap into like other parts of the market. And me and Steve both together kind of so far got this thesis wrong, but we were pretty adamant about this, that would not happen. We were pretty adamant about, hey, large cap tech companies will keep getting their multiple and their premium because they deserve it compared to Costco. And that's just not happened. Like it's like all these stocks year to date have just been trash. They all got hit. Now got NVIDIA at 114.73. Okay, awesome. Hercules got 114.5. Joe got 114.97. All right, so a lot of you guys are snipers. You got some at 114. But look, we still have a lot of time left in the year. But if we look at year to date, I mean, so far, Microsoft down 7%. Meta's the only one that's barely up 3%. Last week, that was down 5%. Google's down 12%. NVIDIA's down 15%. Apple's down 10%. Amazon's down 9%. Walmart's down 5%. And the reason I was so anti-large cap tech would lose some of their steam is because everybody was saying it. So I actually was going contrarian. Like it wasn't just because like, oh, Google's the best thing in the world, so they're not going to lose their value. It was everyone is saying Google has to take a correction and we have to transition into small caps, mid caps, etc. But I felt like that was a consensus trade that got crowded. Sometimes the consensus ends up being right. And, granted, I don't think anyone expected, even though we should have expected the tariff volatility. But that was something that came out of nowhere, even though it shouldn't have come out of nowhere. All of us should have known that he was going to be aggressive on this. But I think we all were in la la land because we all thought markets would just pump with Trump, which, after November 5th, it's hard to deny. Like it was pretty damn exciting, the new environment. But then reality came in with tariffs. So I think from that perspective, that's what really got a lot of large cap tech to lose their equity risk premium here right now. BRK up 17%. That's not year to date though, Arnie, right? Is Berkshire's not up 17% year to date? That's up. Oh my God, Berkshire. How is Berkshire up 18% year to date? What? When did Berkshire Hathaway go up almost 20% in 3 months? Wait, when did this happen, bro? I feel like I'm finding out about this for the first time. Did anyone know Berkshire Hathaway is severely outperforming the S&P in 3 months. Stock Mom got some NVIDIA at 114.65. Shout out to Stock Mom. You literally were 20 cents away from the bottom. You sniped that one very well. Dude, how did it get to 18% on the year? Like, what is holding the? It's not Apple that's doing it. Could it be just pure flight to safety? Like, I knew Berkshire was at all-time highs, but like we saw that last week, but I didn't know it was up 18% all-time highs. Like, that was... He did, yeah, he sold a ton before the drop, but his cash did not gain 18%. Like, the actual businesses inside of Berkshire Hathaway have to be insulated from some of the volatility for us to see 18%. This is why Steve should stop the slander. I agree, dude. Every time he brings up this Berkshire Hathaway is not the yada, 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 I'm like, dude, I get your argument, but it's freaking Berkshire. It's Buffett. I really did not know that, dude. Like, I'm really just fine. I knew they were at all time. I did not know they were up 18%. That is like if they just hold that for the year, that's a great year. It's an incredible year. Wow. I want to look deeper into their holdings, dude. Like, their holdings have to be like American Express has to be doing well. Coca-Cola has to be holding up decently. Kraft Heinz, I don't know if that one's necessarily holding up. That's up 1% today. But some of these names besides Apple have to be doing all right. Kraft Heinz has to be the worst investment Buffett's ever done, though. That one's down 4% this year. It's down another 18% right now over the past year, 4% year to date. And Buffett's acknowledged this too. He's admitted like Kraft Heinz was just a tough business they got into, and they wanted to do a turnaround and all this stuff. But outside of that, dude, 18% is incredible on the year. 18% is incredible. Skrelly just did an Amex deep dive. We should look into it. I heard he also did a Rocket Lab deep dive yesterday. I didn't watch it, but I heard he did a big video like for an hour going through Rocket Lab. I would like to see like how bearish he is on that. Because again, he included them in the bag 7, which feels a little aggressive, but that's what he did. Let's hear from HSBC. They are downgrading U.S. stocks. Let's see the analysis for why they're giving a bit of a downgrade, and then we'll keep going from there.
Significant change for you. And I stress for people who aren't familiar with how you've called this market over the last year, you are no bet on stocks, no bet on high yield credit. You've been bullish when it was the right time to be bullish. And now you've made a move to go in a different direction, Max. So let's take a step back and think about why. What is it that you see that tells you that this uncertainty will persist?
Yeah, good morning. Look, I think what the difference now is to perhaps a month or two ago. A month or two ago, we could have dismissed it as pretty much only consumer sentiment. We could have said this is pretty much driven by a political division. It's not something that is broad-based. It's just a couple of surveys, just a couple of soft data, particularly on the consumer side, and it's driven by one particular thing, so you can dismiss it. What's changed, I think, now is we see a much more sort of broader-based slowdown among all the soft and the survey data. You look at, for example, CEO confidence. We had the biggest one-month slump since September 2008. I think we all know what happened there. You know, you've got in the Philly Fed, you have the biggest 2-month drop in new order expectations in history. That series goes back 55, almost 60 years. We've got the biggest 2-month drop rate. You know, it's not just, it's on the labor market as well. You look at consumer expectations, consumer sentiment on labor market conditions, clearly looking for negative payrolls there. You look at challenger job cuts, clearly biggest jump there since COVID. So my concern is that people are focusing in the hard data. They're looking at the hard data from January, and they're saying, you know what, that's holding up, so let's dismiss the soft and the survey data. But I do fear that we've seen too much damage, and especially too much broad-based damage in the survey and the soft data in order to just dismiss it as a one-off.
So underweight stocks, underweight high yield credit, underweight investment grade credit. Is this a bet then, Max, that this is going to show up in the hard data in the next few weeks and months?
Yes, absolutely. I think what we've done is essentially we've introduced a big sentiment and a big confidence shock into a US economy, which actually has been picking up and has been improving in the second half of last year. When you look, for example, at the labor market, remember payrolls, people were saying, well, it's just government and healthcare jobs. Well, in fact, when we look at the second half of last year, the net number of industries hiring was picking up. So even the labor market breadth was actually improving. And we've seen a lot of sequential numbers which actually were improving in the second half. So it's a bit like, we've boarded a train that's been improving and been running in the second half of last year. And now we're suddenly introducing a confidence and a sentiment shock. So to me,
which is actually what Kashkari is saying right here, right? It's conceivable that the hit to confidence could be a bigger effect than the tariffs themselves. And I think he's right about that. Like if consumers lose confidence, that is much worse than tariffs. I think what this HSBC guy is doing here, though, he's taking a lot of data points and trying to pull them together into creating the narrative that things have to be worse for U.S. equities just by saying, well, if you look at this, and this, that leads us to an inevitable downgrade on what U.S. stocks look like. The one argument I have as a pushback to that is that if earnings growth sustains itself and we don't have a recession, then you don't get the downgrade that he's talking about. Like if we put up amazing earnings or at least good earnings and we can guide for decent earnings, which means we need to not have a recession to be able to guide for that. Now, maybe consumer confidence and all the other data points he talks about leads us to a recession, but he's not making a recession call. That's the thing about these analysts, bro. Like if they want the downgrade on US equities to be like, hey, the United States is not the right place to invest in because of all these different data points, they've got to make a recession call. No one wants to make a recession call because if you make a recession call and you're wrong, you lose a lot of credibility. A lot of it. And so these analysts try to, step in and say like, well, we don't like US stocks right now because there's all these things that are bad, but they're not calling for a recession. And then when I look at sort of the fundamental earnings picture, I'm like, if we don't have a recession, these earnings will get a multiple. It's not like these earnings are going to be ignored by the market. They might be ignored in the short term, but over the coming months, I think NVIDIA's earnings can't get ignored. Like at some point, the market looks at where do we put our capital, and you put your capital into things that are growing. So unless they make a full-on recession call, which none of the major analysts have done, by the way. Like even Mike Wilson, all these guys, they have not made we will have a recession call. And hey, we're a little afraid of some of the volatility. NVIDIA back under 115. But they're not saying, yep, we're calling for a recession. Because if they called for a recession, they would have to tell their clients to sell stocks completely. They would have to say to their clients, hey, get the hell out of the market. If we get a recession, everything goes to shit. Yeah, meet Kevin has been calling for a recession. He's been calling for a recession for a while, but a lot, like I have not heard any like premier equity research firm, JP Morgan, Goldman Sachs, Oppenheimer, Bernstein, Benchmark, any of them say, yes, sell everything. We have a recession coming up. Now, granted, that just might mean stocks may go neutral or flat for the year, right? But when they paint such a fear-mongering picture, it sounds as if they think a recession is coming, but they don't want to make the call that there's going to be a recession. And again, if we don't have a recession and we have earnings growth, yeah, we could be flat, but I don't think we have to have some dramatic 20, 30% decline like 2022. Granted, yeah, recessions happen sometimes when people aren't looking for one. So that is also fair. NVIDIA right here, 114.87. Wow, it could not hold on to 115 off of the 114.46 bounce. Let's see if it violates 114.46. Let's see. Let's see if it actually gets a new low of the day. And here's an update right here on NVIDIA.
Without special government permits, the first such effort under this new Trump White House. Meantime, some new concerns today about NVIDIA's business in China. With all of that, we turn to Christina Partsinevelos. Morning, Christina.
Well, new energy efficient regulations threaten to block NVIDIA's H20 chips from the Chinese market, potentially jeopardizing up to 13% of its total 2025 revenues. This is according to the FT. Beijing's latest regulatory move puts NVIDIA really in a strategic pressure cooker, also why you're seeing shares off almost 5%. The company must now consider radical chip redesigns to really improve energy efficiency, or they risk losing their foothold in one of the world's most competitive tech markets. Industry sources are revealing NVIDIA is already developing a new chip for China specifically for that market with improved memory, possibly improved energy efficiency. Wells Fargo analysts remain confident, citing the company's proven track record of navigating geopolitical challenges. Quote, "It would be foolish to think NVIDIA would not find a business solution for this new issue." But the real threat comes from domestic rivals like Huawei, who are positioning themselves as potential replacements, signaling China's rapidly advancing technological capabilities. At the center of this high-stakes drama is NVIDIA's CEO, of course, Jensen Huang, who is preparing to meet with Chinese officials, according to the report. This is more than a business negotiation, though. It's a delicate diplomatic dance that really tests the boundaries of U.S.-China tech relations. And the stakes are definitely clear. Protect about $17 billion in market value, navigate geopolitical tensions, and maintain technological leadership in an increasingly competitive global landscape. Shares off now 5%, David.
Yeah, we're keeping an eye on that. That continues to weaken. Thank you, Christina. Hyundai is opening a new EV plant in Georgia.
All right, so that is the reason NVIDIA is getting hit. 114.82, still holding on. Still holding on. But not at that 114.46 level. Market close today, yes. More likely than not at 12:45, which is California time. Tanner and Roy and I will do a market close. It'll just be us three talking about stocks for like an hour. So 12:45 to 1:45, 3:45 to 4:45 Eastern. So yes, we should have a market close today. The event is at 6:30 Pacific, 9:30 Eastern. So you can watch it live on their YouTube or their X. But 6:30 is Pacific time is when the event starts. That's true. JP Morgan did give a 50% likelihood of recession. I think Goldman Sachs raised it to like 35% last week as well. So we did get some of these guys raising their probabilities, but they're not making the full-on call of just like, get out of the markets. Because again, and Mike Wilson made that call back at the end of 2023 before 2024. And obviously his clients were stuck in money markets. They were not experiencing a 25% year. And it sucks. So when you call a recession, bro, especially with clients that have a lot of money, I mean, you got to be right, because those clients don't like the opportunity. They're just not going to be your clients anymore. They're going to go to Tom Lee and be like, hey, what should I do with my money? Because you seem to know what's happening here. Now, granted, that's not always the best thing either, because that means just everyone's getting bullish, right? But the point is, if you miss a really big bull rally and you're managing billions of dollars like Mike Wilson is, it can be bad. So I feel like you'd rather be wrong and lose your clients' money than protect them from a recession, because it's very difficult to call a recession. And like on the off chance that you're wrong, which you probably will be, just like statistically the odds aren't in your favor, you'd rather take a down year than a year where you somehow protected them, because you might not protect them from anything if nothing ends up happening. Take it easy on the mocktails tonight. All right, so there will be an open bar. There will be an open bar. And your boy is going to make sure to start off light with the Shirley Temple, and then take it easy with another mocktail. And then maybe we'll touch some actual alcohol tonight. So I will be taking advantage of the open bar to get some Shirley Temples. I don't know. Maybe I'll drink a little bit after the event. But guys, I'm just not a big drinker. It's not a big drinker. I just don't. Alcohol's not really a vice for me. There's not going to be a Bay Area meetup. We already had a Bay Area meetup 2 weeks ago, so we can't do another one. It's just not. You need a lot of time to set that up. Number two is I'm only here for 2 days, so we'll probably do another Bay Area meetup eventually, probably like a year from now. But for this year, we did it already. It was an awesome event. Same thing with New York, and April looks like Toronto. But yeah, we can't do another Bay Area meetup within 2 weeks, because it takes a lot of planning to actually get the meetups to actually work out. But Tanner will be at the Toronto one, so that'll be a good one. We will do NYC again later this year, probably like December. We'll definitely do NYC again. So, and that one's just easy to do because I'm so close to it. But yeah, we'll definitely do New York City again. And then Bay Area, probably, dude, I'll be back in the Bay Area next year. Like, I feel like I'm going to be coming back here a lot of times. So next year we'll definitely do Bay Area again. Since 1950, the probability of any given year having a recession is 15%. So it's always a chance. 35% or 50% is meh. Nothing really. Yeah, I would agree. There's always a shot of a recession. It's just, if companies put up earnings, it's hard for the market to get that upset about where they allocate their capital. Because again, the market has a lot of money. Dude, this CoreWeave IPO, by the way, 5 times oversubscribed. Like the capital markets, when you go public, have so much liquidity. There's so much money out there. And obviously retail has introduced a whole new angle of liquidity over the past couple of years, but institutions just have boatloads of cash and they need to put it to use, which is why I think we avoid a recession more often than not, outside of all the macro reasons. Like, people need to allocate capital. And if companies are well capitalized, they have the ability to execute on their earnings ambitions, which is why they continue to maintain liquidity. And that also helps us avoid a recession. But we just have so much money, particularly in the US. There's so much freaking money out there. Like, the CoreWeave IPO really 5x oversubscribed? Like 5x the amount of demand to buy this new semiconductor cloud computing company that people don't even know is going to be successful in the public markets. Like, that's how much demand there is to deploy new capital over something like Google or NVIDIA, like, that's the other thing about the US markets. Like, everyone loves the risk taking. So like, whenever there's a new idea out there, that's the beautiful thing about venture capital in the United States. I mean, so many startups fail, but there's so many startups get funded because they have the ability to attract capital. Because in the US, people want to take risks with their money. Where's Palantir? Are we red today? Why NVIDIA bounced off 114, so we hit 114.80, and then we bounced back to 115. Palantir 94.65. That's down about 2%. And then Rocket Lab does have a launch coming up. Where is their launch happening, guys? What is the details on this launch? Can we watch this launch? Like, what is live streamed? There's a 63rd mission for Robotaxis 8 satellites. They're a constellation company designed with thermal infrared cameras to provide 24/7 monitoring of wildfires globally to help protect forests, people, and infrastructure. The plan is to grow this constellation to 100 satellites through 2028. And it's happening in New Zealand. Okay, so hold on. Are they streaming this? Can we watch this? Do they do it on YouTube? Rocket Lab launch. Also, if this is not successful, are we going to tank today? Oh yeah. Yeah, they have the live stream ready. Okay, cool. All right, so we can watch this whenever it's ready. Does anyone think they're going to fail at this launch? Are we good on this launch? Like, we're not going back to 18, right? Because of this launch. Rocket Lab right here, 22. If they fail on this launch, Skrelly's going to look really damn smart. Calling them a bag 7 company. CoreWeave is obviously not a good buy, but still somehow they're oversubscribed. So look, I think they're not a good buy, given I think their revenues are contingent on Microsoft. However, there might be parts of the market that have done a lot more due diligence on CoreWeave than just reading the S1, which is, probably the most elementary form of due diligence on a brand new IPO. So the 5x demand might not be retail. It might be more institutional demand that just wants more exposure outside of the traditional semiconductor stocks. But let's see, dude, how the IPO does. I mean, their IPO get $50. If that thing collapses within a couple weeks of IPOing, then the IPO markets are not ready for new companies. They're just not. But if we, stay stable or we get to 60, 70 from that $50 IPO, then maybe these other companies will be more excited. I don't know if we're doing the Boston meetup this year. We got to see. We might be doing Toronto over Boston in April, just because a lot of you guys are in Toronto. So I think that one might be a little bit better. I would love to come to Boston. I just don't think there's as many people in Boston versus Toronto. And I want to go to some of the bigger cities where a lot more people have a chance to come out. So we might do Boston later in the year, but for now, I think Toronto is on the docket. I've been to Boston many times though. I've been to Harvard many times as well. I had a couple debate tournaments there. I was coaching there. But I haven't really explored Boston. It's always for work. I haven't really looked around. Will you get a new hood gavel through TSA? I hope so. I hope if I get a new gavel, TSA doesn't take it away. Dude, TSA, when I was coming to California, they started checking my laptop. And I'm like, guys, it's a laptop. Come on, bro. This is stupid. And I was like, thank you. They finally gave it back to me. I was like, come on, it's a laptop. There's nothing in this freaking laptop. So hopefully they didn't think there was a gavel in this laptop. I don't have Toronto details yet. I will have details when I come back from California. I'm still trying to figure it out. I'm thinking the 3rd week of April, either the 18th, 19th weekend, or either the 25th, 26th weekend. It's going to be one of those 2 weekends. Leaning towards the 18th, 19th. So I will keep you guys updated, but no exact details yet for Toronto. But I'm excited to come to Toronto, dude. Like, I've never really explored Toronto, and amazing city, and so much culture there, so much music. I feel like I should visit it, given it's like so close to the United States, and I've never been there. So I'd be, and it's an hour-long flight, so it's a quick flight to get there. I have been to Montreal as like a spring break. I went to Montreal in college, but never Toronto. Do you think people are selling their NVIDIA to buy the CoreWeave IPO by any chance? Maybe. I think that's kind of stupid, but maybe. I think maybe people just want something new, bro. Like, we have not had any new exciting ideas in the markets for so long, because last year the most important IPO was Reddit. So I think people just want something new. And because of that, they might be going to CoreWeave. Meeting at Tim Hortons. We definitely have to do Tim Hortons in freaking in Canada. We need to see if this coffee is as good as people say it is. ARM was not IPO'd last year. ARM, when did ARM IPO'd? When did they IPO? They IPO'd in 2023, right? Yeah, September 2023 they IPO'd. I mean, they performed well in 2024, but yeah, they IPO'd in. Okay, cool. So what other headlines do we have? What else do we have? You guys think Tim Hortons sucks? Really? Does it actually suck? I mean, that wouldn't surprise me. It's always like consensus opinions end up sucking when everyone likes them. But I still want to try it. I still think we definitely have to try it. Okay, let's get an update on Kashkari. This is all the stuff that he said, and then we'll keep going from there.
But says that people buy a lot of stuff from overseas. The last round of tariffs did not bring manufacturing back to the U.S., rather moved it from China to other countries. We had durable goods reports this morning coming in well above expectations. 0.9% of decline had been expected. Transportation also healthy. But that business investment number we're looking at, minus 0.3%, that's new orders for capital goods. That was negative. Going to watch that to see if maybe some of the sentiment numbers of the soft data are flowing into the hard data. Goldman, after this report, keeping its Q1 tracking of GDP at and the New York Fed administrators face significant drops in credit scores once the delinquencies appear in their credit reports in the first half of 2025. New student loan delinquencies can reduce credit scores by 150 points. The biggest impact is probably going to hit those borrowers with prime or super subprime credit. They can potentially see their credit.
Wait, are we frozen? Are we frozen or are we good? Are we frozen? Is the hotel Wi-Fi screwing us up? We're back. Okay, I think that was a little bit too much for the Wi-Fi. Oh yeah, even the audio froze. Everything froze. Okay, we're back. Cool. We're good. We're good. We're good. Anyway, he was just saying that Kashkari is being a little bit more bullish on tariffs than hawkish. You guys saying call Steve? Let's see if he picks up. He might be busy, but let's see if we can get him on. Hotel refund. It's a good hotel, dude. This is a good one. They upgraded me too, which is nice. So it's not horrible. But yeah, sometimes the streaming is just too heavy on their Wi-Fi. Dude, I definitely got to come to Brampton. I know there's a lot of Indians in Brampton. Is that near Toronto? Is that close to Toronto? Okay, Steve can't pick up. He's in a meeting. Brampton is definitely Toronto-esque. He'll answer. He just dropped an article. Figure versus Eptronic. Which company do you see dominating? Well, I'm invested in both, so I hope both do well. I think Figure. I think Figure just has a lot of momentum. Oh, here's the video. We didn't even get to watch the video. So this is the video they put out yesterday on Figure. They're also the most highly sought after stock now in the private markets. We talked about that yesterday, more than OpenAI and SpaceX. So they're really getting a lot of buzz. And this is the video they put out yesterday. I'm going to turn off the sound. But it's a new natural form of walking. Wow, Tanner's awake. Look at Tanner. He actually woke up. Tanner, good morning. I hope you got your beauty sleep. Look, there's the Figure 1 versus the Figure 2. So it's starting to walk a little bit more natural, right? A little bit more. And they trained it on a ton of data to be able to get there. So, I mean, this is only going to get better and better and better. And again, being the most highly sought after private stock doesn't mean it's a good company. It just means a lot of people believe in its potential. Figure has to prove that they can live up to the potential. But I mean, they are showing a new video almost every week, and pretty much every other robot company, including Tesla, is not. So look at that. There's the difference. Brett called it the Biden walk yesterday. He literally said, yeah, no more Biden walk. I was like, damn, bro, this guy, this guy does not care. But there's your walking comparison. I think that's bullish. Like, dude, I think Figure's going to $1 trillion. Like, I really do think this is going to be one of those big ass companies. Look at this, dude, Brett. And also, I like him as a founder, bro. He doesn't care what people think. Look at this. Look at this meme. Like, he does not care, bro. He's becoming one of those people that's just like, screw you. I'm going to win. I'm going to freaking win. And he's putting up the progress to start justifying a lot more of the hype that people have around Figure. There's a lot of people that also think Figure, is a scam. And I just cringe when people say that, because it's like, once you actually have gone to the company and like see the robots in person working, it's not a scam. You could say it might not go to $1 trillion. That's a fair argument. But is it a scam? It's like, no, dude, that's not it. Like, a scam would be some Theranos type of like lie. Like, they've put out too much content for people to still feel that it's like a fake company. But a lot of people have an interpretation of it. NVIDIA right here, 115, down about 4.4%. Grab still holding up, 4.7%. Yeah, I think all those will do well. He genuinely comes across as a good guy. Yeah, he's a great guy, dude. He was super nice to us when he met us. I brought 2 other people with me to the interview, and he was super nice to them. As soon as we came in, are we still glitching? Are we still glitching? Are we glitching? No. Okay, are we back? Are we back? Are we back? Are we back? Dude, this internet, this hotel is not letting us stream. I blame Tanner. Tanner woke up and he told the manager something. We're back. I feel like I can't share my screen, but every time I share my screen, it's too much stress on the internet. All right, we're back. We're good. Yeah, guys, I don't think we're going to be able to watch this Rocket Lab launch. I think it's going to be just too much on the internet here. So maybe we end it out in like 5 minutes. But anyway, what I was saying is I think he comes off as a really good guy. He was super nice to me and a bunch of the people that I brought with me to the interview. And so hopefully Figure does well. But I think it'll play out over the long term, and I think they're going to be a big company. Tanner's sucking up the bandwidth. Yeah, bro. Tanner woke up He's messing up all the bandwidth now. Dude, it was so funny. We gave Tanner so much shit yesterday. Like, every time he was taking too much time, we're like, Tanner, we're going to be late, bro. We're going to just keep being late. Tanner said I had this problem yesterday. You know, honestly, this problem has only popped up in the last, 5 minutes. The prior 2 minutes, 2 hours and 20 minutes have been perfect. So the fact that this has only happened in the last 5 minutes is actually not horrible, to be honest. So, yeah, not bad. All right, cool. I think we end it here then. We'll give the internet a break, and we'll be back. We'll be back on the close. I'll be with Tanner and Roy. And, yeah, more people are waking up, so they're probably using the Wi-Fi now. Yeah, that's fair. Yeah, because it was 4 a.m. Yeah, that makes sense, dude. I woke up when no one was using the internet. Now everyone's getting up and checking their portfolios and selling everything. So, all right, cool. We'll end it there. We'll be back with Tanner and Roy at 3:45. NVIDIA getting a little bit of recovery, 115.58. Grab holding on to its green, up 4%. Robinhood down about 4.74%, getting a little recovery as well from the absolute lows. Tesla's down 4%. And the S&P 500 down about 0.3. So when we get back on the close, we will see where the market is. And I'll be with Tanner and Roy and get their thoughts on what's going on with Robinhood. Oh, real quick, I forgot to show you guys what Vlad said about sports betting. So Vlad responded to someone last night about sports betting. And there's been a lot of chatter about what they've been doing. And I think Vlad's response was a good response. I think it was a very simple response. So someone said, so Vlad wrote this thing about the wealth transfer, right? On X. And then someone said, so Vlad said, the coming years will be critical, but we are working to ensure you navigate them smoothly when talking about the wealth transfer. And then someone said, navigate them smoothly by betting it on March Madness. And Vlad says, it's their choice if they so desire. Pretty simple. Pretty simple. If you want to navigate your wealth transfer by betting on March Madness, it's your choice. If you want to bet on NVIDIA, it's your choice. If you want to stick in cash in a money market fund, it's your choice. It's your choice. It is what it is. It's your choice. So I thought it was a good response. I think he's basically saying, hey, dude, you have to take personal accountability, and whatever you want to do is whatever you have to do. Did Rocket Lab call the stream off? Is the Rocket Lab stream off right now? No, it's still live on YouTube. 19 minutes to launch, right? Yeah. They're not. It doesn't look like it's getting called off. I'll post the link in the chat for anyone who wants to watch it. Trump's going live too? No. Trump's not going live. Sorry. I was like, what? Trump's going live again? He's not going live. Okay, let me put the link in the chat for anyone who wants to see it. Since we can't stream it. But we'll be back for the market close and we'll go from the there's a stream for anyone who wants to check it out. Hopefully it goes well and maybe the market reflects on it as well. All right, word of the day. What do we got on word of the day? Then we'll get out of here. Word of the day is okay. I think you guys are going to love this one. Petty fogging.
Petty fogging.
Insignificant or petty. No one has heard this word before, bro. There's no way any of you guys. I've heard the word petty, but I've not heard petty fogging. The lawyer's petty fogging arguments were only meant to stall the case. The novel's epic saga is weighed down by the petty fogging formalities of aristocratic etiquette. Dude, that was a hell of a sentence. You got to give me credit on that sentence, bro. You got to give me credit on that sentence. Aristocratic etiquette. I deserve a little bit of credit for not messing up those two words. And that's because aristocratic comes from the philosopher Aristotle. And so I know how to say that because of my philosophy background. But petty fogging, huh? The Fed is petty fogging. Facts. The Fed is petty fogging. Insignificant or petty. All right. Well, I don't think anyone's heard this word before. We've all heard petty. I've never heard it connected to petty fogging. Eric, congrats on sounding out. Dude, when I have a kid, I'm going to make sure that they start pronouncing words in kindergarten correctly. I'm going to make sure before they do math, they don't have my pronunciation problem. And if they start saying words wrong, I'm going to realize, damn it, I passed down my genes of not knowing how to talk. I'm going to try to fix that up as soon as possible. So, all right, cool. Thank you, everybody, for being here. I'll be with Evan as well. Stock market news. He's going to be here. So it'll be super fun. We'll get some behind-the-scenes content. We will also have Tom Lee on Friday. By the way, 11 a.m. Tom Lee on Friday, about 45 minutes. Me, Evan, and one of his partners, Wolf Financial, will be interviewing him on Twitter Spaces. We'll stream it on YouTube as well. So we'll get Tom Lee's thoughts on the markets and everything else from there. All right, cool. Market close. We'll be back at 3:45, 12:45 Pacific. And then we'll get you guys all the behind-the-scenes updates on the Hood event later today as well. All right. Thank you, everybody. Appreciate you all. See you guys in a couple hours with Tanner and Roy. Bye, everyone. Have a good one.